Okay, so today we are going to discuss an interesting topic. It is about the conceptual framework for financial reporting. So when it comes to this conceptual framework for financial reporting, yes, this is a kind of topic I believe that each and every one of you are familiar. So in fact, during your A levels or sometimes in the uh, undergraduate degree program, you would have certainly, or even in the professional qualification, you would have certainly uh, discussed the conceptual framework for financial reporting. So, but the thing is, this conceptual framework for financial reporting, it's a very contemporary topic. In fact, that is the reason why we have taken that to this course even. It's a very contemporary topic. So it's going to be uh, changed time to time. So in my case, when I was doing my A levels, I used to learn the conceptual framework, that is the conceptual framework for preparation and presentation of financial statement. That is the conceptual framework of 1988. So that is, I think, the most of you would have learned that. So during your A levels or even at the university. Then after some time, this conceptual framework, in fact, after 22 years, in 2010, a revised conceptual framework was issued. And that is what we call the 2010 Conceptual Framework for Financial Reporting. And thereafter, most recently in 2018, this conceptual framework was again, it was revised, and the latest version of the conceptual framework is the Conceptual Framework for Financial Reporting 2018. And that particular conceptual framework uh, had become effective for the period starting from 1st of January 2020. So therefore, it is a very contemporary, very recent phenomenon. So when it comes to this conceptual framework. So in fact, that is the reason so why we are going to discuss this. Hence, in this course, you may be able to grab some latest knowledge in conceptual framework for financial reporting. So it's going to be the 2018 conceptual framework for financial reporting. So these are the learning outcomes. At the end of the today's discussion, you must be able to describe the role of conceptual framework. So here, at the end of the discussion, you must be able to say what is the role of the conceptual framework. And then we are going to looking at the different building blocks, the building blocks of the conceptual framework. So like the objective of conceptual framework, the qualitative characteristics, the elements of financial statements, the definition, recognition, measurement, likewise. That is what we call the building blocks of conceptual framework. So you must be able to describe each and every one of these aspects. And then we are going to have a discussion on the advantages and the disadvantages of a conceptual framework. So whatever the thing that you take, right, it has certain benefits and uh, disadvantages. So it is commonly applicable for the conceptual framework as well. So there are certain advantages as well as some perceived disadvantages. So we are going to have a discussion on that. And not only that, most importantly, you must be able to assess the relationship between this conceptual framework and the accounting standard setting. So I would say the relationship between the conceptual framework and accounting standards. So, you know, these accounting standards are developed based on the conceptual framework. So therefore, there is a kind of a relationship over there. So we are going to extensively discuss that. So these are the learning outcomes what you are expected to achieve at the end of today's discussion. So this is a lesson outline I'll be taking you through. First, we'll be looking at the definition of conceptual framework. So we must need to know what is conceptual framework and what is the rationale, or I would say why we need a conceptual framework for financial reporting. Then we'll be looking at some historical development, the evolution of the conceptual framework, starting from 1920s. It's not a kind of a very recent phenomena. It has evolved since 1920s. So it's nearly a century, nearly a century. It is still evolving, and even in the future, even if we are to have this discussion in 2050, yes, we can still discuss the conceptual framework, because that is not going to be, it's not going to be a, it's a never-ending process. It's a never-ending process, so it keeps evolving. Then we'll be looking at, most importantly, the content of the conceptual framework, and we call it the building blocks of the conceptual framework. Finally, the benefits and disadvantage of the conceptual framework is discussed. Right. Then the today's discussion that will help you to clarify certain issues. In fact, the learning, the lesson outline also in line with this. So in this discussion, I'm going to clarify these questions with you. So at the end of the day, you are having kind of, you're expected to have a kind of clear understanding on what is the conceptual framework, what is the rationale, or what is the purpose of a conceptual framework, the evolution of conceptual framework, the elements, or we call it the building blocks of a conceptual framework, and finally the benefits and limitation. So this is the exactly the content or the question that I'm going to answer in the today's discussion. Right? Okay. So having said that, let us come to the first uh, important, the first major area of discussion. Right. What is the conceptual framework? So before we move on to the content, what we have, so would like to see a kind of general understanding. So what it mean to you? What is the conceptual framework? I'm not asking a kind of conceptual framework for financial reporting. I'm not confining to the financial reporting. Uh, Rather, I'm asking in broad, what it mean to you, conceptual framework. Yes. So would like you to contribute what it mean to you. So when we talk about the conceptual framework,
A comprehensive and overall function of a particular system. So,
sorry, can you speak little louder?
yeah, it may be comprehensive
Yeah,
function of a particular system.
it's a comprehensive functioning of a particular system. Yes, good, very good. So the general idea is there. Good, appreciated. Even others can add to that. So it's a kind of comprehensive functioning of a particular system. Yes, very correct. So it's a good idea. It's a framework that defines the scope of financial reporting. Yes. So you are taking that, you're linking that to the financial reporting. So therefore, it can be a kind of framework or defines the scope of a particular area of study, let's say. So yes, again, the idea is there. So it's good that you're having a kind of a general understanding on conceptual framework. Good. Yes. So even if I'm to share my briefs on the conceptual framework, yes, it's a kind of a set of guiding principles. So simply putting, the conceptual framework is a set of guiding principles that would guide a decision in a particular area. It's a set of guiding principles, right? The conceptual framework is nothing but a set of guiding principles that would guide a decision in a particular area. Or you can say it's a kind of established body of concepts. established body of concept. So if you take this conceptual framework, it is not just limited to financial reporting. This conceptual framework can be seen everywhere, right? The conceptual framework can be seen everywhere. Say, for example, if you take this degree program, you are following the Masters of Professional Accounting. So if you take this degree program itself, so it is developed based on the conceptual framework. What is the conceptual framework that this particular degree program is based on? You'd have sometimes heard that it's a Sri Lanka qualification framework, right? According to the Sri Lanka qualification framework, this particular degree program is developed. So it's a master's degree. There's a particular NVQ level which we have to pitch, and there is certain credit values that must contain in this degree, the set of subjects, the research component, everything is guided. So therefore, when it comes to the Sri Lanka qualification framework, it would basically guide the establishment of the different degree programs, the master's degree, the undergraduate degrees, and also the diploma programs, advanced diploma programs. So likewise, it governs the body of knowledge. So it basically governs the different academic programs. So therefore, this degree program itself is based on a conceptual framework. So the Sri Lanka qualification framework would provide the set of guiding principles. And even if you take this subject, that is also developed based on a conceptual framework. If you take this particular subject, the subject itself has a particular objective. Because the subject has an objective. You would have seen that in the course outline. So if you take this course outline, that is going to be a conceptual framework. So that is the most important thing. In the very first day, I think uh, Atula sir or Samantha ma'am has extensively taken you through this course outline, because that is our conceptual framework. Now we are simply act according to that. There we identify the credit value, there we identify the objective, the learning outcomes, so matching of program learning outcomes to the course learning outcomes, the subject content, how we are going to get evaluated, right? So everything was clearly laid out. So in that sense, it's a kind of set of guiding principles. So it's a conceptual framework. So not only that, even if you go to the country level, so if you think about the country, right? So there is a conceptual framework. So when you come to the country, what is the conceptual framework? When the society, as far as the society is concerned, it is governed by what? What is the conceptual framework? If you consider about country, the society, so it's governed by a particular framework. What is that? අපි රටක් විදියට මොකක්ද අපි govern වෙන්නේ කොහොමද? Yes, very correct, very correct. It's a constitution. So it's going to be the constitution. So when you come to a country, the laws and the regulations of the country is developed based on the constitution of the country. So therefore, as a country, as a society, we have a conceptual framework. So hence, if you think carefully, so the conceptual framework is everywhere. Conceptual framework is everywhere. So it is simply a set of guiding principles that would guide a decision in a particular area. So if you apply that thinking to financial reporting, yes, for the financial reporting, we do have a conceptual framework. So in that, it will guide the accounting practice. So it would guide the financial reporting practice, right? It is the conceptual framework for financial reporting. Now let us look at a very comprehensive definition that is given on conceptual framework. So as I told you that when it comes to this conceptual framework, the initial efforts was made in 1920s, right? So it was started by the United States, And when it comes to the evolution of this conceptual framework, one of the remarkable feat was that the conceptual framework for financial reporting, that was 1978. That was the Financial Accounting Standards Board conceptual framework for financial reporting. So in fact, that is the US accounting standard setting body. So the Financial Accounting Standards Board set the accounting standards for the United States. So they are the pioneering uh, entity in setting the conceptual framework. So in 1978, the Financial Accounting Standards Board conceptual framework defined what is a conceptual framework. It says that it's a coherent system of interrelated objectives and fundamentals that is expected to lead to consistent standard. So it talks about everything. It says that conceptual framework is a logical system. So it's a coherent system. So we call it, it's a logical system. It is logically connected. If you take the building blocks of the conceptual framework, it is logically connected. It's a coherent system of interrelated objectives, right? At that time, in fact, there were like 12 objectives. But if you take the today's context, when it comes to the objective of the conceptual framework, basically we are having one overriding objective. But at that time, they had identified uh, the conceptual framework, it was having like 12 uh, objectives. So therefore, they are talking about these interrelated objectives, right? It's a coherent system of interrelated objectives and fundamentals. What are the fundamentals? Those are the other building blocks. So when it comes to the conceptual framework, basically it has the objective of financial reporting, then the qualitative characteristics of financial information, the elements of financial statement, recognition, measurement, likewise, several other building blocks are there. So we are going to witness that, right? So this is what we call the fundamentals. So therefore, conceptual framework is about the interrelated objectives and fundamentals. So the objective is there and there are other building blocks. So it is logically connected. It is logically connected. And it is expected to lead to consistent standard. This is the most important thing. So this is what we call the purpose of conceptual framework. The very purpose of a conceptual framework is to logical and consistent development of the accounting standard. So if you take this definition, it basically captures the content of the conceptual framework in the sense objectives and the fundamentals. It is the content of the conceptual framework and most importantly, the purpose of the conceptual framework. It's about the logical and consistent development of a accounting standard. Accounting standard. So that is what the conceptual framework for financial reporting. It's a very comprehensive definition even for today. So we acknowledge that, right? That is the conceptual framework for financial reporting, right? It talks about the content and the objective. It prescribes the nature, functions, and limits of financial accounting and reporting. So when it comes to financial accounting and reporting, we are talking about the economic performance. So that may be the nature of financial reporting. And when it comes to the limits, so we do not talk about the social performance, the economic performance. No, we are not going to talk about that in the conceptual framework for financial reporting. So it is the limitations. And also when it comes to functions, so we are basically talking about the activities that an organization would undertake to uh, satisfy the information needs of the users who are not in a position to demand the information. So that is basically the function of financial accounting and reporting. So likewise, the conceptual framework would prescribe the nature, functions, and limits of financial accounting and reporting. So in fact, We call this conceptual framework. Later you may learn, probably in the next topic when we are going to discuss about the theories. This is a normative theory. It's a normative theory. Why is that? Because it prescribes what the practice must be. So that is the key word, right? It prescribes what the accounting practice should be. So the theories that basically prescribe how a particular thing should happen, it's a normative theory, right? So you will discuss them even in the next chapter extensively. So this is about the conceptual framework. So therefore, the expectation is not to memorize the things, not to memorize the things. What is expected that you would make sense out of this, right? So if you put it in a kind of a logical way, so that's it. So whenever if it is asked to come up with the definition, you need not to repeat what it is exactly there, but instead, if you can focus on the key areas, that is the most important thing. So you need to know that. Now you know when it comes to the conceptual framework definition, it focuses on two things. One is about the kind of content, objectives and fundamentals. The other one is about the objective, the consistent and logical accounting standard. So if you can mention on that, that's it. That is about the conceptual framework for financial report. Now let us try to draw a kind of a relationship between the conceptual framework and accounting standards. So earlier we agreed that when it comes to a kind of a country, we have a constitution, right? We have a constitution. Then what it does, the constitution would basically govern the society. The constitution would help to govern the society. But the constitution directly, it does not directly involve in governing the society. Instead, based on the constitution of the country, the laws of the country is developed. Through the laws, the society is governed. නේ? ඔකට අපි දන්නවා රටක තියෙන ව්‍යවස්ථාව පදනම් කරගෙන රටක නීති රීති හැදෙනවා. ඒකට මේ නීති රීති පදනම් කරගෙන තමයි accounting, sorry, society එක govern වෙන්නේ. So if you take the same thinking to the conceptual framework for financial reporting, the conceptual framework is expected to govern the financial reporting practice. In simple words, the general purpose financial statements. The financial reporting practice in the sense, general purpose financial statements. So conceptual framework governs that. So like the constitution may not directly involve in the governing of the society, here also the conceptual framework does not directly involve in governing the accounting practice. Instead, what it does, based on the conceptual framework, the accounting standards are developed, right? Then through the accounting standards, it would govern the accounting practice. So that is the logical relationship between the conceptual framework, the accounting standards, and the general purpose financial statements, right? So that is the accounting practice. When it comes to the conceptual framework, it basically deals with broad issues, the broad issues in financial reporting, like what is the objective of financial reporting? So what are the qualitative characteristics of financial information? So what are the elements of financial statement? Likewise, it deals with several broader areas. But when it comes to the accounting standard, it is governing a very narrow area. But these accounting standards must be consistent with the conceptual framework. So based on the guidelines provided in the conceptual framework, the accounting standards are developed. So if you take any accounting standard, it looks at a particular narrow area. For example, if you take the LK 16, the property, plant and equipment, it may take care of the accounting for property, plant and equipment. It initially defined, first it defines what is PP, then it talks about the recognition, then it talks about the measurement, the disclosures, presentation, those aspects are dealt in. But if you look at this recognition, measurement, definition, the disclosure, everything is in line with the guidelines set out in the conceptual framework, right? So therefore, these accounting standards, which is directed or which is dedicated for a very narrow area, is developed based on the guideline that is set out in the conceptual framework. So in every standard, you would find that when it comes to the objective, that objective is in line with the objective of the conceptual framework. So that is the objective of financial reporting. So if you take the recognition, that is in line with the recognition criteria set out in the conceptual framework. Even when it comes to the measurement, that must be something in line with the measurement criterion that is set out in the measurement basis that is prescribed in the conceptual framework. The presentation, the disclosures, everything is in line with the conceptual framework. So when it comes to these accounting standards and conceptual framework, so the conceptual framework basically deals with the broad issues, while the accounting standards would take care of the very narrow issues. So in fact, when it comes to the accounting standards, we are having like 40 odd standard. We are having 40 odd standard, right? For PP, we have standard, we have a separate standard for investment property, the intangible asset, the financial asset, the biological asset, the inventory. So likewise, we have a kind of a 40 odd standards are there. So it governs each and every aspect of the general purpose financial statement. So it is nothing but the elements of financial statement and also the presentation and preparation of financial statements. So that is what the accounting standards does. So through these accounting standards, when you are preparing the financial statement, you need to apply the accounting standards, and the financial statements that is prepared by applying the accounting standards. In our case, the financial statement that is prepared applying the SLFRSs and LKSs, we call it general purpose financial statement, right? So this is important. We are talking about the general purpose financial statement. So the general purpose financial statements are the financial statement that is prepared applying the SLFRSs and LKSs, right? So it's not about the special purpose, but it's about the general purpose. So why we are talking about this general purpose financial statements? So these are the financial statement that is basically intended to meet the information needs of the users who are not in a position to demand the informations from an organization. So if you take a public listed entity, say that you are an investor, you are a shareholder, but being a shareholder, you are not in a privileged position to request the information that you want, right? Assume that you are a kind of investor in the John Keel's holdings. Let's say that you have a kind of a reasonable stake, say that you have like 5% of the shares of JKH. So being a kind of a investor in this John Keel holding, say that now you are in the process of thinking about purchasing some more shares in the John Keel's holdings. So in order to make that decision, you believe that some futuristic information is required. So you need to know that what is their strategic plan. So what are the strategies that they have set for the next 3 years? So what are the kind of objectives that they have set out for the next 3 years? Likewise, say that you want to have access to their corporate plans, right? So being a shareholder, can you go and request that information? Or can you go and have that information. What is your position? Being a shareholder, having 5% interest, would you be able to do that? Yes, your thoughts? Being a shareholder of the JKH, the 5% interest, 5% stake. So would you be able to go and ask for their corporate plans or the future plans? Yes? What do you think? So you can go and say that to the, let's say, the corporate office, the head office, you may go there and say that, look, so I'm thinking about purchasing another 5% of the shares of your company. But in order to make that decision, I need to have certain information because I need to be pretty much confident in this decision. So can you share with me your corporate plans? So what you are planning to do in the next 3 years? So what are your expansion projects? Likewise, certainly you may be able to go and ask that, but they may not uh, they may not satisfy that. No. Yes. So you have said no as the right, but not possible practical. Yes. So you can go and ask that. Yes, you can go and ask that, but they are not going to entertain that. So therefore, when it comes to this conceptual framework, basically, this conceptual framework would take the position of this the poor party. So the most important party, that is going to be the investors. So they are not in a position to demand whatever the information that they want from an organization. So therefore, the conceptual framework is dedicated uh, to satisfy the information needs of these parties who are not in a position to demand the information. So hence, the financial statement that is directed towards these investors and the parties who are not in a position to demand the information is what we call the general purpose financial statements, right? That is what we call the general purpose financial statement. So when companies conceptual framework, it focuses on the general purpose financial statements. So if you prepare the financial statement, applying the accounting standards, which is developed based on the conceptual framework, it is there to protect the interest of the poor parties who are not in a position to demand the information from an organization. So these investors, the lenders, the creditors, being the most important parties, they are not in a position to demand information. So in order to satisfy their needs, these general purpose financial statements are being prepared. So they are prepared on an annual basis, on a quarterly basis, and they are being published. So you can access them most of the time online. The annual reports uh, can be accessed. So when you come to this general purpose financial statement, you can locate them in the annual reports. So in the financial reports, in the annual reports, you can locate this general purpose financial statement. So therefore, the conceptual framework is applicable for this general purpose financial statements. But if you take an annual report, does that only contain the financial statement? Probably not. It is simply a one particular aspect, right? But other than that, there are certain other information. If you take the annual report, there may be certain other information like the governance related information and the sustainability related information. So what is your social consequences of business operation, the environmental consequences of business operation. Likewise, you may talk about the sustainability aspects and also the management commentary, right? The chairman's message is there, and also the CEO's message is there, and the general information as to the business. So likewise, several other information is also there in the annual report. Then When it comes to the conceptual framework, it does not deals with these voluntary disclosures. So if you take this governance reporting, if you take this sustainability reporting, if you take this management commentary, all these are comes under the voluntary disclosures. So that is also a kind of important aspects in the today's environment, but it is something beyond the control, beyond the scope of the conceptual framework. The conceptual framework would only deals with the economic performance of an organization. So hence, it deals with the general purpose financial statement, where we talk about the financial performance or the economic performance of an organization. But in this course, you will be learning the different reporting dimensions like sustainability reporting, the integrated reporting. So these are the latest development in the corporate world. So those are comes under the voluntary disclosures. So in fact, having seen the limitation, so having seen the limitations of the general purpose financial statements, so these different reporting dimensions has evolved, right? But it is something out of our scope. We are talking about the general purpose financial statements, so which is a mandatory requirement. So when it comes to the specified business entities, uh, SBEs, according to the Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. So there they identify certain entities to prepare and publish the general purpose financial statements. So in that, one of the important part is those who would require to prepare this general purpose financial statement are uh, the public listed entities. So in Sri Lanka, we have 300 odd public listed entities. So these entities would require to prepare the general purpose financial statement and publish. Apart from that, the banking institutes, the insurance companies, the finance companies, the stock brokerage companies, likewise, there are certain entities that is identified as specified business entities, SBEs. uh, they would require to prepare the general purpose financial statements, right? So it's about the regulatory framework. Okay, so this is the relationship over there, right? Now we come to the purpose of a conceptual framework. So even by now, you may be able to tell what is the purpose of conceptual framework. So before we move on to the slides, so depending on what we have discussed, so you are in a position to discuss, yes, what is the purpose of a conceptual framework? මොකක්ද conceptual framework එක purpose එක? So depending on what we have discussed so far, okay, let's see. Yes, you are somewhere there. So we need to refine that. Good. Setting accounting standards. Yes, others can add to that. Good. Appreciate the initiation. Yeah. It's setting accounting standards. Yes, yes, it's setting accounting standards to guide on developing best practice. Okay. Again, yeah, going in the correct direction. Proving the qualitative characteristics. Okay. Everything, yeah, and that is also there. Good. Right. Good. So you are sharing a kind of a understanding what you have gathered. Good.
What factors are influencing on the conceptual framework in the financial accounting,
Mm-hmm.
and how they affect on the reporting. So it explains, the conceptual framework explains normally the what are the factors
Yeah.
affecting the financial statements, how
Okay.
it will, which factors, how it will affect one to each other, like that. I think
Yeah.
the general idea.
Right. Good. Good. Appreciated. So it's good that you are sharing a kind of a common understanding. Yeah. So I would say that each and every answer, yes, you are correct in a way. Yes. So everyone is correct in a way. Yes. So simply putting, the purpose of a conceptual framework, as we have extensively discussed, that is about uh, to guide the accounting practice. In guiding the accounting practice, uh, we want to have the logical and consistent development of accounting standards, isn't it? In the earlier slide, you have witnessed that to guide the accounting practice, we need the logical and consistent accounting standards. So therefore, the very purpose of a conceptual framework would be the logical and consistent development of the accounting standards. Or you can even say logical, it's a consistent development of the accounting practice even. So that is the purpose of the conceptual framework. කොට අපි බැලුවොත් conceptual framework එකකින් අපි බලාපොරොත්තු වෙන්නේ accounting practice එක guide කරන්න, right? ඒතකොට මේ accounting practice එක guide කිරීමේදී අපිට අවශ්‍ය වෙනවා logical සහ consistent accounting standards. ඒතකොට මේ logical සහ consistent accounting standards develop වෙන්නේ කොහොමද? conceptual framework එකක් තිබුණා. conceptual framework එකක් නැත්නම් මේ accounting standards අතර consistency එකක් නැහැ. The accounting standards may be developed in a ad hoc manner. So it can be developed in a ad hoc manner. If the accounting standards is developed in the ad hoc manner, then what about the accounting practice? These financial statements may not be comparable, may not be comparable. The comparability would be compromised. So that is the danger. And that's why we need a set of guiding principles, right? So the purpose of a conceptual framework is to develop the practice of financial reporting logically and consistently. You need the practice to be logical and consistent. Or even you can say the accounting standards must need to be developed logically and consistently to govern the practice. But how do you achieve that? In order this accounting practice to be developed logically and consistently, you need to be sure, or you need to have answers for this question. So if you are pretty much clear on these aspects, then only the development in the accounting practice is going to be logical and consistent. So hence, in broad, what the conceptual framework is doing, the conceptual framework is going to answer this question, right? The prime purpose, the accounting practice, the accounting standards to be logically and consistently developed. But in doing so, you must need a clarification on the following issues. So in broad, the conceptual framework would provide you with the clarification on the following issues. In fact, these are the broad issues. So you must need to have a sound understanding on these broad issues. Then only the accounting practice can be logically and consistently developed through the accounting standards, right? So we'll see what those broader issues are. So first you need to know that what do you mean by financial reporting, right? This is about the conceptual framework for financial reporting. Then you must first need to know what do you mean by financial reporting. So in fact, what do you mean by financial reporting? මොකක්ද මේ financial reporting කියන්නේ? Again, if I refer to a kind of definition that is given in the Financial Accounting Standards Board, they say that those are the activities that are intended to meet the needs of the users who are not in a position to demand the information that they want from an organization. Hence, depends on the information that the management communicate to them. And that's what we call the financial reporting. So the financial reporting කියන එකට යම්කිසි definition එකක් හෙව්වොත් යම්කිසි explanation එකක් හෙව්වොත් ඒක අපිට හොයාගන්න පුළුවන් Financial Accounting Standards Board. The Financial Accounting Standards Board, in their conceptual framework, they talk that the objective of the financial reporting means the activities undertaken to meet the information needs of users who are not in a position to demand information. So that is basically the investors, lenders, and creditors. Those parties are not in a position to demand the information. Hence, they depend on the information that the management communicate to them. So, the most important feature of a company, if you take, the most important feature is going to be the separation of the ownership from the management. So in that, uh, yes, you have to depend on the information that the management communicate to them. Yeah, gives the information to related to the end user. Yeah, so that is the yes, financial reporting. Yes, that's what I'm explaining. Yes, so when it comes to financial reporting, those are the activities that is undertaken to satisfy the information needs of users who are not in a position to demand the information from an organization, right? So that is basically the financial reporting. So therefore, the very first thing you need to know what is financial reporting. Then it talks about which organizational characteristic indicate that an entity should produce the general purpose financial reports. And the other thing is that we are talking about the general purpose financial statement. Then who are the ones that should produce the general purpose financial statement? That should you should also be aware of that, isn't it? Because this is about the financial reporting. This is about the general purpose financial statements. Then you need to be pretty much clear on who are the parties, who are the entities that should prepare the general purpose financial statement. It is not meant for everyone. So not the sole traders, not the partnerships would prepare the general purpose financial statement. Then who are the ones that should prepare the general purpose financial statement? That is also going to clarify by the conceptual framework. Then another thing that you need to know, what is the objective of financial reporting? So at the end of the day, what you're trying to achieve. So what is the objective of this financial reporting? That must also need a clear answer. And you need to know what are the qualitative characteristics of a financial information. Then elements of financial reporting. So what about the recognition measurement? Likewise, these are some of the broad issues of financial reporting. So the conceptual framework is going to clarify these issues. So when you have a clarity on these issues, right, the development in the accounting practice is going to be a logical and consistent one, because everyone is sharing a common understanding. So what that means to me, the financial reporting, what it means to me would be the meaning that you are also sharing. So therefore, everyone is in a common understanding. So once these broad issues are clarified, so then it is having a kind of influence on the accounting practice, because the accounting practice is going to be logical and consistent. Because based on the conceptual framework, the accounting standards would be developed, then the accounting standards would be logically and consistently developed. As a matter of that, accounting practice is going to be logical and consistent, right? So conceptual framework addresses broader issues, right? Without agreement on these issues, the broader issues what we have highlighted, the accounting standards will be developed in an ad hoc manner. As I repeatedly told you, if you are not sharing a common understanding on this, then the negative, or I would say that the bad thing that can happen is that the accounting standards would be developed in an ad hoc manner. The limited consistency between the accounting standards would be witnessed in the absence of a conceptual framework. If the conceptual framework is not there, then the limited consistency can be witnessed between the accounting standards. But now, nowadays, if you take this 40 or the standard, whatever the standard you would take, you might find that every standard starts with mentioning the objective of that particular standard, and which is in line with the objective of the financial report. Then it talks about the definition of the elements, which is in line with the conceptual framework. The recognition, measurement, everything is in line with the conceptual framework. So that particular consistency has achieved because of the conceptual framework. Right. So it's about the purpose of conceptual framework. Now we are going to look at the evolution of the conceptual framework. So before we moving on to the evolution, yes, so far I would like to have a kind of feedback on the way that we are moving on. Uh, yes, am I too fast taking you through the content, or am I too slow in the sense that am I explaining too much or something, or you are not getting enough clarification? Yes, would like to have a kind of idea before we move on further. So are you fine with the way that I'm delivering, or what are the changes that I should make to improve your understanding, your better for better understanding? Yes. Am I moving too fast, or am I too slow, or are we in the right speed? Are you getting what I'm saying? Yes. So before we move on to the next important thing, it's about the evolution. So if I just go back to the discussion, we discussed the definition and also the rationale, right? So these are the two aspects what we have discussed. Then we are coming on to the history. So that is also going to be interesting to know how this has evolved from the past. Now it's okay, right? Okay, right. Okay, so thank you. So you are getting the idea of what I'm trying to convey, right? Okay, so it is better that, so if you're not getting any, just to let me know, then I can make the correction and we can move on. Okay, fine. Then we will move on to the third most important aspect of the today's discussion. So far we discussed the definition, then the rationale or the purpose of conceptual framework. Now let's look at the evolution of the conceptual framework. You know, when you come to our country, the Sri Lanka, the conceptual framework that is applicable for us is the International Accounting Standards Board. So we are pretty much influenced by the British. So as a colonial inheritance, I would say that when it comes to the accounting profession, that is also heavily influenced by the British. So as a matter of that, when it comes to the conceptual framework, what is applicable for us, it is going to be the International Accounting Standards Board. So earlier I talked about the dominant accounting standards board in the world in 1970s, from 1920s, I would say, that was the Financial Accounting Standards Board. But the Financial Accounting Standards Board is for the US context. But when it comes to Sri Lanka, this International Accounting Standards Board that is initiated by the United Kingdom, the Canada, the Australia, those are the countries, the pioneering members who have introduced this conceptual framework. Right. Now let's look at the evolution of the IASB conceptual framework. So in fact, the International Accounting Standards Board has made first step toward the conceptual framework that was in 1989. And that was the framework for the preparation and presentation of financial statements. So in fact, this is what the conceptual framework most of us would have learned during our A-levels or even at the degrees, right? But when it comes to this development of this 1989 conceptual framework, this particular endeavor was initiated by the United Kingdom, as I said, the UK, and also the Canada and the Australia. Those are the countries, the pioneering members who has contributed to come up with the conceptual framework for the rest of the world. Because for the USA, the conceptual framework was already there. That was the 1978, the Financial Accounting Standards Board conceptual framework. That was the dominant one. And in fact, in this early development, the most of the concepts, the most of the content of the conceptual framework was largely drawn from the FASB conceptual framework. So it is in a way, it's a good development. So if you are going to start something new, So it is better to draw from the giant. So it is better to draw from the giant. So that particular idea was there at that time. They have largely drawn from the Financial Accounting Standards Board. Then after some time, during this period, the several what you call the amendments would have been made to this conceptual framework. The conceptual framework is ever evolving, so it is an evolving thing. So therefore, certain amendments would have been made, but there was a kind of a significant uh, change, or the drastic change has happened in 2010. So with that, they have managed to issue the revised conceptual framework for financial reporting. In fact, in this period, you know, uh, in 2005, followed by that, the Enron, the collapses, the collapses in the USA, this Financial Accounting Standards Board and the International Accounting Standards Board, they have come into a kind of a joint project. In 2005, they have initiated that, and they wanted to have a one conceptual framework for the whole world. Instead of having two conceptual framework, the FASB for the USA and the ISB for the rest of the world, instead of having two conceptual framework, they were sharing the idea that be better to have a one conceptual framework, right? So with that understanding, they have come into a kind of joint project in 2005, and then they work towards a kind of a single framework. But initially, in fact, they have planned to carry this project out in 8 phases. The phase A, B, C, likewise, in 8 phases, they have planned to carry this out, the whole project. But from 2005 to 2010, all what they have managed to accomplish is only the phase A. Only the phase A was completed. So as a result of that, they could update, they could agree on the objective of general purpose financial statement, or the objective of financial reporting. They agree on that, as well as they could manage to agree on the qualitative characteristics. So that is the only thing that they could accomplish. So they could not agree on the reporting entity. They could not agree on the definitions of elements of financial statements, then the recognition, measurement, presentation. So those aspects they could not cover up. All what they could achieve is only the first phase. In the first phase, the objective of financial reporting has been revised, and also the qualitative characteristics has been revised. So hence, compared to this 1989 conceptual framework, the only two aspects that was different in this 2010 conceptual framework is the objective and the qualitative characteristic. The rest of the things is simply drawn from the previous conceptual framework. So therefore, only the first two parts was revised in the 2010 conceptual framework. එතකොට 2010 conceptual framework එකේ ඇත්තටම 89 framework එකෙන් වෙනස් වෙන්නේ අර මුල් aspect දෙක විතරයි revise වුනේ. objective එක වෙනස් වුණා. ඒ වගේම qualitative characteristics වෙනස් වුණා. ඔය ටික විතරයි වෙනස් වුනේ. The rest of the thing, the recognition criteria, measurement, and even the definition, everything would remain the same. ඉතුරු ටික 89 framework එකේ තිබ්බ දේවල්. And also in 2010, this FASB and ISB, they have separated. They felt that they cannot take this any longer. So therefore, the FASB and ISB separated, and then they start working for their own conceptual framework. So having agreed on the first two aspects, for the rest of the aspect, they thought of working on their own. So FASB worked on their own, and the ISB worked on their own. So as a result of that, the ISB has managed in somewhere in 2013 to come up with a draft, the discussion paper. So they have amended the rest of the things, and then they have come up with the discussion paper in 2013, and they have presented that for the comments of the public in the sense the professional accounting standards, the corporate giants, and the regulatory bodies likewise for different, the academics, likewise different uh, stakeholders, they have presented this uh, conceptual framework, the revised conceptual framework they have presented, that was in 2013. And they have welcomed the comments of these different parties, and then having incorporated those comments in 2016, they have came up with the exposure draft. Then again, another round of comments were welcome, and finally, in 2018, they have come up with uh, the fully pledged or the entirely revised conceptual framework in the sense the rest of the aspects. So they have already uh, what you call revised the objective and the qualitative characteristics in 2010. But apart from that, the definition of the elements and the recognition, measurement, presentation, the rest of the things they have revised, and they have come up with the fully revised conceptual framework in 2018. So therefore, it is completely different from the conceptual framework what we had on 1989. The definition of the assets are different, the definition of the liabilities, income, expense, everything has changed. The recognition criteria has changed. We are no longer having that, the probability criterion, the reliability criterion is no longer there. We are having a separate or different recognition criteria. The measurement bases are different. So likewise, everything was new. So that is what we are having now. It is 2018 conceptual framework for financial reporting. But when it comes to this evolution, this is basically I have discussed about the evolution of the International Accounting Standards Board, which is applicable for us. But I told you that when it comes to the conceptual framework for financial reporting, it is evolving since 1920s. So in fact, initial efforts on this conceptual framework was witnessed in the United States. That was in 1920s. One of the remarkable feats in that history, that was in 1936. The AAA institute, that is the American Accounting Association. So in 1936, they have issued a kind of conceptual framework, the initial effort that was about the statement of accounting principles. So they have managed to issue set of statements of accounting principle that is to provide some theoretical foundation for this financial reporting. So therefore, that is one of the remarkable feats in the history. That was in 1936. So it is made by the American Accounting Association. That is a statement of accounting principles. They would have identified the objectives, the qualitative characteristics. So likewise, they would have identified certain, they would have addressed certain broader issues. Then thereafter, in 1958, that is AICPA, the American Institute of Certified Public Accountants. So they have appointed the Accounting Principles Board. So with the intention of having a kind of a conceptual framework, so they have established an organization that is called the Accounting Principles Board. And their movement is what led to this 1961, 1962. They have managed to come up with the set of tentative accounting principles for the public uh, enterprises. So they have came up with a set of tentative set of accounting principles, accounting what do you call that, statements that is for the public enterprises. So this is that moment. So this is one of the remarkable feats. So that's why we have started discussing the history from this point onwards. In 1991 and 1961 and 1962, they have prescribed that accounting practice should be based on current values, not on historical cost. This is one of the most controversial at that time, right? One of the controversial uh, recommendation that they have come up with. So at that time, in 1960s, this AICPA, the Accounting Principles Board, had managed to identify that. They said that when it comes to reporting the statement of financial position items, that is assets, liabilities, rather than using the historical cost, it is better that these assets liabilities is reflected at the current values. So that was kind of a too radical idea at that time, right? In 1960s, they have proposed that, and it's a wonderful kind of uh, recommendation. But they have made that in a kind of a wrong time. That was in 1960s. But when it comes to today's environment, after 60 years, so this statement is pretty much valid. So today, we recognize the importance of these current values instead of the historical cost, but this particular accounting standards uh, board, so accounting principles board, they have managed to identify and acknowledge that in 1960. So in a way, it was a kind of a good idea. But at that time, it was heavily criticized. It was heavily criticized because that was considered too radical. But again, it is not a kind of a mandatory thing. That's why I told you that it's a kind of uh, tentative set of accounting principles, tentative set of accounting principles for the public enterprises of the USA. So it's a tentative. So if they wish, they can follow. Otherwise, they can simply ignore. It's a kind of a more principle-based one. So therefore, it was not something mandatory, but it was heavily criticized at that time. Then after 1965, so depending on the existing accounting practice, again in the USA, so they have codified the existing practice. So what is there in the practice? So they have codified that. So they developed theory based on the descriptive of existing accounting practice. By looking at the practice, they have codified, right? So therefore, so if you really look at this conceptual framework from a critical point of view, so if you're taking critical point of view, uh, so today we claim that the conceptual framework is a kind of a normative theory, in the sense it prescribes the practice. But if you really looked into that, so what it has happened in the very early stage, it was simply a codification of the existing practice. They simply look at the existing practice and then they have codified that. So it is not a prescription of accounting practice, simply it's a codification of the existing practice. But that was the initial stage. So therefore that claim is subject to a kind of a doubt whether this conceptual framework is really a normative theory. So it is questionable. So this led to the release of Accounting Principles Board, Statement Number 4, Basic Concept and Accounting Principle underlying the financial statement of business enterprises in 1970. So this Accounting Principles Board that was formed, as I told, it was in 1958. So they were in operation. So therefore, in 1965, they have achieved a remarkable feat. So that was about the codification of the accounting practice, and they have come up with the concepts and accounting principle underlying the financial statements of business enterprises. So it is about some history. So it is good to have kind of a rough idea. So this may never be tested anywhere, that you may never be asked to mention the evolution of the conceptual framework, but it is good to have a kind of understanding. Then it will help you to appreciate this conceptual framework. You would realize that it's a historically it's an evolving thing. So it comes from 1920s. So therefore, that particular understanding would help you to appreciate the development in this conceptual framework. So that's the very purpose. Right. Then another remarkable feat that was in 1971, the True Blood Committee, again another movement in the USA. So you can see that. So all these movements in this conceptual framework, so it was witnessed in the USA. So then this True Blood Committee that was formed in 1971, they produced the True Blood report. So they have outlined the 12 objectives of accounting and 7 qualitative characteristics which financial information should possess. So I think that you can remember earlier I told you at that time in 1978, The phase B, they have defined that the conceptual framework is interrelated objectives. Then now you know the reason for that. So at that time, there was like 12 objectives rather than having one overriding objective in the today's context. So there were like 12 objectives, and also there were 7 qualitative characteristics. But it is more or less the same. Even in the today's context, we have 6 qualitative characteristics. Then if I'm to take one or two objectives, the objective one was the financial statement are to provide information useful for making economic decisions. So the first objective, it focuses on the information needs of the financial statement users. So that is one objective. The second objective is that the financial statements need to serve the users with limited ability to demand financial information, right? So they have taken that in a separate objective. So likewise, so if you take the today's context objective, it is simply by considering all of these objectives, they would have derived the objective. So here, so in fact, now we can say that no. So if you look at these objectives, these two objectives can easily be coupled, isn't it? So we could have said that the financial statement are to provide information uh, to users who have the limited ability to demand financial information for making economic decisions, isn't it? But at that time, they used to put it as separate objectives. So likewise, they would have gone up to 12 objectives. But in today's context, so we are putting everything in a single objective, under single objective. So therefore, time to time, it was about the improvement uh, in the thinking and the wording. So we are taking them as the evolution of conceptual framework. So likewise, but still the most importantly, they used to talk about this, the decision usefulness at that time even, and also they focus about the poor parties who are not in a position to demand the information. So the being the investors, being the owners, still you are not in a privileged position to demand whatever the information that you want. So that is the kind of a remarkable thing when it comes to a company. So when it comes to a public listed entity, when it comes to a company, you would find that the ownership is separated from the management. So managers would take care of the business operations, and the owners, they would provide the capital and they would take the risk, and they are outside. So in order to ensure that the managers are running the business in the best interest of the companies, the financial statements are being prepared. So therefore, it is being communicated to these investors. So the financial statement need to serve the users with limited ability to demand financial information, right? So that is about the objective. Likewise, there were 12 objectives at that time. So it was interrelated. Then in 1978, as I said, that this movement has led to the formation of the Financial Accounting Standards Board, the conceptual framework. Uh, then, this conceptual framework is ever evolving. Even by 2018, so different amendments are being introduced. So far, 8 amendments have been introduced to this Financial Accounting Standards Board, but it is again not going to stop. So it's going to continue forever. So it's going to make revisions and move on. So that is the how it evolves. Then 1989, we discussed that the ISB conceptual framework. So that was a conceptual framework applicable for us. Then 2005 to 10, both the uh, two dominant conceptual framework preparers, they have entered into a kind of a joint project. It's a convergence project towards a one conceptual framework. But it did not work. In 2010, they separated, but they could agree on mutually on two things, that is objectives and the qualitative characteristics. So therefore, if you take the FASP conceptual framework and ISP conceptual framework, the one thing that you would witness in common, it's about the objective and the qualitative characteristics. So while the rest of the things are different, as I mentioned in 2013, by updating the rest of the building blocks, the rest of the component, they have issued the discussion paper. The comments of the public were welcome. The corporates, the regulatory bodies, the professional accounting standards board, professional accounting bodies, the academics, likewise different parties, comments were requested. And then they have come up with the comments incorporated version. We call it the exposure draft of the conceptual framework in 2015. Then in 2000, another round of revision, another round of comments. After that, the final conceptual framework. So in fact, this is the kind of a due process that is being used in the development of the framework as well as the accounting standards. So මේ accounting standards develop වීමේදී සහ conceptual framework develop වීමේදී තියෙන due process එක තමයි මේක. ඒතර මුලින්ම යම්කිසි idea එකක් accounting standard එකක් උනා develop වෙනවා නම් ඒ idea එක draft paper එකක් විදියට දාන්න. ඒතර ඒ draft paper එකට comments welcome කරනවා. ඒතර comments එක අරගෙන ඒ comments incorporate කරලා appropriately exposure draft එකක් දාන්න. ඊට පස්සේ ආපහු public comments වලට දාන්න. ඒතර ආයි comments එකක් incorporate කරලා තමයි finally standard එකක් conceptual framework එකක් එළියට එන්නේ. ඒත් ඒක තමයි අපි කියන්නේ due process in accounting standard setting and the conceptual framework setting. So they have come up with 2018, and that is the conceptual framework. And that particular conceptual framework is applicable for the period starting from 1st of January 2020. Then we can reasonably predict that, so with that change, the accounting standards is going to get changed in the near future. So the accounting standards would require changes in line with that. අනාගතයේම නුදුරු අනාගතයේම අපිට පෙනේවි accounting standards එකත් ඔක්කොම change වෙන්න ඕන. මොකද අපේ තියෙන තාමත් 2010 conceptual framework එකට අනුව තියෙන recognition, definition, measurement මේ දේවල් වෙනස් වෙන්න ඕන. So you can witness them in the near future. The 2010 conceptual framework, you could see that the objective and the qualitative characteristics were updated, but in the 2018, so even the rest of the things were updated. So now we are having a fully pledged conceptual framework. It's a very latest fully pledged conceptual framework, which is different from what we had in 1989 and what we had in 2010. So these two aspects subject the no changes, the subject no changes because it was already agreed. So it is only the rest of the part from chapter 3 to chapter 8. That is what is new. The 2018 වල update උනේ chapter 3 ඉඳලා 8 වෙනකම්. මොකද 1 සහ 2 අපි 2010 වල update කරලා no changes there. Right. Only 2 chapters. Yes, in 2010. The thing is that, as I told you, in 1989, we already have that conceptual framework. Then this is what they have revised from the ISP side. This is what they wanted to revise. But all what they could revise is only the first 2 chapters. So therefore, if you take the 2010 conceptual framework, only the first 2 chapters is updated. The rest of the chapters, that is exactly the 1989 chapters. So 2019 2010 issue කරපු එකේ තිබුණු ඉතුරු chapters ටික ඇත්තටම 89 තිබ්බේ ඉතුරු chapters ටිකම තමයි. update වෙලා තිබ්බේ first 2 chapters. නමුත් 2018 වලට ආවම ඔක්කොම ඉතුරු chapters ටිකත් update වෙලා ඔක්කොම දැන් latest එකක් තමයි තියෙන්නේ. Right? So that is about the conceptual framework 2018. Good. So this is a kind of a summary of the content of the conceptual framework. It would have been nice that we have taken them later. From this point onwards, basically what we are going to do, we are going to discuss about the building blocks or the components of the conceptual framework. So this is in fact the broader issues in financial reporting, as I mentioned, under the purpose of conceptual framework. We are going to looking at the definition of conceptual framework, we are going to looking at the definition of financial reporting. In fact, I have discussed with you already. That is the activities undertaken by an organization to meet the information needs of users who are not in a position to demand the information that they want from an organization. Then here we are going to looking at the definition of the reporting entity. We'll be discussing the objectives of financial reporting, the definitions of users of financial statement and their information needs, the underlying assumptions, qualitative characteristics, elements, measurement basis, recognition criteria. So this is going to be the aspects what we'll be discussing from this point onwards. More precisely, we are going to looking at the objective, qualitative characteristics, element, recognition, and measurement. And you can see that. So here we have taken the conceptual framework components in three levels, the level 1, level 2, and level 3. So even if you go back to the definition of the conceptual framework, now you can make it pretty clear when it comes to this content, the objective and the interrelated, so interrelated objectives and fundamentals. So this is exactly the fundamentals, and this is the objective, and this is the building blocks of the conceptual framework. So any conceptual framework, if you would take, it will definitely starts with the objective, right? We do all the subsequent things that is to achieve this objective. So therefore, the objective is what provide the uh, kind of a guidance. So in fact, that is what we would expect to achieve at the end of the day. So therefore, the first level, that is about the purpose of financial reporting, or we call it the objectives of financial reporting. Then, in order to achieve that objective, right? In order to achieve that objective, uh, basically, if I talk about the objective, it is simply, we'll be discussing them later, that is to provide the financial information to uh, the existing and potential investors, lenders, and creditors to make resource allocation decision. So the objective of financial reporting is to provide financial information. That's it. Yeah, they are to provide financial information to investors, lenders, creditors to make the resource allocation decision. In the sense, they might need to invest, they might need to withdraw their investment, or they might need to provide loans, or they might need to settle the loans, the entities, they would require these entities to settle the loans. Likewise, those are the resource allocation decision. So when it comes to this objective, the financial information, we want to provide financial information. Then what are the qualities that the financial information what we may provide should possess? And that is what we call the qualitative characteristics of financial information. So අපි දෙන financial information එක තියෙන්න ඕන qualities මොනවද? නම් මේ objective එක achieve වෙන්න නම් අපි ඒක යම්කිසි quality එකකින් දෙන්න ඕන information. So ඒ qualities ගැන අපි කතා කරනවා. Then what are the elements of financial statements? So at the end of the day, so we are talking about only 5 things. And accounting is as simple as that. All what we discuss about assets, liabilities, equity, income, expenses. So those are the elements of financial statements. So in order to achieve that elements, we want to report these elements. We want to recognize and measure. We want to present these elements by ensuring the qualitative characteristics. So therefore, it's a kind of a bridging level. It will bridge the first level and the third level. We call it the bridging level. And in the third level, we have the implementation of the objective of financial reporting. It's about the recognition and measurement. So you are going to recognize these elements, the asset, liabilities, income, expenses, equity, you're going to recognize and you're going to measure them, either at the historical cost, either at the current values. So it's about the recognition and measurement. So therefore, I would say that out of this particular diagram, the most tangible component, right? The most tangible component is going to be the recognition and measurement. So that's why we call it the implementation stage. So if you take a kind of annual report, if you take the financial statement, so what you would see the results of this recognition and measurement. So you would witness the asset, liabilities, equity, income, expenses, right? So those are the elements, and this information what we may provide should have to have certain qualities. Then only we would be able to achieve the objective of financial report. So the objective is to provide the financial information that is useful to make resource allocation decision, right? So how this information can be useful if they have certain qualities, right? So this is witnessed in the elements of financial statement, and that is what we recognize and measure, right? So this is exactly the broader issues in financial reporting, or at the same time, the key content or the building blocks of a conceptual frame. So from this point onwards, we'll be answering each and every question. අපි දැන් කරන්න බලලා මේ ප්‍රශ්න ටිකට answer කරන්න. So before that, let us do one activity. And since we have taken lots of time, I think that it is better to go for a break. Before we go for the break, we may do this and have a break and continue. Right? අපි දැන් ගොඩක් වෙලා කතා කරා. You might feel bored. So let's go for activity and have a break and come back. Break කරන්න. ටික කරමු. Yes. Let's look at this activity. Which of the following statements about the conceptual framework are true or false? So depending on what you have gathered, you must be able to answer this. The first one, the objective of financial reporting is the foundation from which the other aspect of framework logically result. It asks us, the objective of financial reporting is the foundation from which the other aspects of the framework logically result. You know, the conceptual framework is all about the interrelated objectives and fundamentals, and this is that the objective is the foundation, is the key from which the other aspects of the framework logically result. Yes? Is it true or false? Like true the false there? Would like you to answer? Okay, let's see. Good. Yes, very correct. Very correct. So it's true. Yes, because we discussed that. The most important thing is the objective. No? Depending on the objective, the fundamentals are decided. The fundamentals are dedicated to accomplish the objective. Yes, very correct. Then how about the second one? The general purpose financial report are most useful to company insiders when making business strategic decisions. General purpose financial reports are most useful to company insiders. What do you think? Yes, very correct. Because we repeatedly emphasize that we are talking about the poor investors. Our focus is on the parties who are not in a position to demand the information. For them, the management is directing the general purpose financial statement. So hence, yes, it is not the insiders would make the better use out of that. It is, in fact, the outsiders, the investors, lenders, creditors would make the better use out of that. Very correct. Then how about capital providers are the only user that benefit from the general purpose financial reporting. So when it comes to general purpose financial reporting, that is only for the capital providers. The only user is going to be the capital provider. Is that? Yes, very correct. Yes, you are in the correct direction. Yes, it is true that our focus is on the capital providers. We are pretty much dedicated towards the investors, lenders, and creditors because they are the ones who provide us the resources, the financial resources. So hence our focus is on the financial capital providers. So in fact, we identify that is our objective, to provide information to capital providers. But that does not mean that the others can benefit out of that. Even the suppliers, customers, the general public, whoever the party can benefit out of that. It's not a problem, but our focus is on the capital providers. So therefore, it says only, so therefore we cannot agree on that. Yes, you are pretty correct. Then finally, the accounting standards that rely on a body of concepts will result in useful and consistent pronouncement in financial reporting. The accounting standards that rely on the body of concepts will result in useful and consistent pronouncement in financial reporting. So simply putting, if the accounting standards are developed based on the conceptual framework, then that's going to be more useful. Yes, we do agree that is what we emphasize. So with that, I believe that so that is the key content what we have discussed so far, and it is pretty much evident that you have made sense out of that. So you have taken these questions pretty correctly. So in so it might suggest that so you are having a clear understanding so far. Good. So then thank you. Now let us break. Let us break for say 10 minutes time. Would that be sufficient? So let us break for 10 minutes time. So now it's almost 4:45. Let me say that in 55 minutes past 4, shall we meet? දැන් 4:42යි අපි 4:45යි කියමු. ඒකට අපි 4:55ට වගේ හම්බෙමු, right? So have a break and come back. So you're supposed to complete the rest of it, right? Okay, so let's continue with the rest of the chapter. From this point onwards, basically what we are going to do, we are going to discuss the components of the conceptual framework, the building blocks of the conceptual framework, starting from the objective. So let us look at what is the objective of conceptual. So what is the objective of financial reporting as per the conceptual framework? So it says that the objective of general purpose financial reporting is to provide financial information, as we have discussed earlier, about the reporting entity that is useful to existing and potential investors, lenders, and other creditors, right? So here basically it's about providing financial information about the reporting entity that is useful. So the useful financial information to existing and potential investors. So they are the owners of an organization, the lenders and other creditors. And in broad, we can say they are basically the resource providers in making decisions about providing resources to the entity. So in order to make the resource allocation decisions, these capital providers need the financial information. So we are there to provide the useful financial information. And that is the objective of financial reporting, right? Uh, when come to this resource allocation decision, even I have just mentioned. So put yourself as an investor, put yourself as a creditor, lender, and what are the decisions that you would make regarding an organization. So either as an investor, you might think of buying more shares, or sometimes you may thinking about selling some of the shares that you may have, or sometimes you might think of holding the shares for some time. It could be the equity instrument, or even it could be the debt instrument. So that is the kind of example for a resource allocation decision. Or if you put yourself as a kind of a lender or creditor, you may be thinking about providing more loan facilities to the entity, or requiring the entity to settle the loans that you would have, and also the credit that is to be offered, the credit period extensions. Likewise, as a lender, as a kind of a creditor, you may make certain decisions. So in making these decisions, you would require the information about an organization, right? So therefore, the objective is to provide the useful financial information to help the resource allocation decision of the capital providers. So that is the objective of financial reporting. And also as a kind of a investor, as a kind of shareholder, you might thinking about exercising right to vote on or otherwise influence the management actions that affect the use of the entity's economic resources. So one of the privilege that you would have as a shareholder is going to be your right to vote. So you are going to exercise that. So in doing so, you would also require information. ශාහෝල්ඩර් කෙනෙක් විදිහට අපිට ආයතනයක් සම්බන්ධයෙන් තීරණ ගන්න පුළුවන්. ඒතකොට ඒ තීරණ ගැනීමේදී in the annual general meeting most of the time, so we need the information. So whether to favor the management actions or whether to prevent the management from a particular course of action. So you can think of. So therefore, the overriding objective of this financial reporting is about the providing financial information. But apart from that, this financial reporting would serve another purpose. And what we call that? We call it the management stewardship. This financial reporting would also help the management to discharge their accountability towards the capital providers. That is also a kind of a objective that comes under the financial reporting. But more prominently, we talk about the decision usefulness, or it's about providing the financial information to the users. But apart from that, as a kind of a secondary objective, you can also acknowledge, you can also identify this financial reporting would help the users, help the management to discharge their accountability towards the uh, resource providers, or we call it the capital providers. You know, when it comes to the most dominant form of business, you know, that is going to be the companies. So in that context, the most crucial feature is that the ownership is separated from the management. So in that particular relationship, you know, the owners would provide, the investors would provide the resources to the business organization. So simply, it is about the owners are entrusting the resources to the management. So having taken these resources, the managers are under a obligation. The management have a accountability. They have a responsibility. What is that? So they need to put these resources to the best use. They need to put these resources to the best use and make a fair return for the capital providers. So that itself is not good, not sufficient. They need to communicate that. So therefore, the accountability has two aspects. One is about the putting resources to the best use. The other one is about communicating the result. So this communication aspect is taken care of by the financial reporting. So therefore, the financial reporting is the medium through which the management discharge their accountability towards the owners, towards the capital providers. So in a way, we can say that the management stewardship, together with the decision usefulness, is also form the objective of an organization. So does that make sense? Anything that you would like to add? Uh, any question? Yeah. Does that make sense? The objective. Right. Okay. See. Yeah, okay, fine. Okay, good. So let us move on. If we dig deeper into this objective, then how do you relate the objective of financial reporting to the financial statements, to the information what they would communicate? So let's look at that relationship. So in broad, we agree that the objective of financial reporting is to provide the financial information to capital providers in supporting them with their resource allocation decision. So we want to provide uh, the capital providers with the useful financial information to make the resource allocation decision, to facilitate the resource allocation decision. So that is about the objective. Then, if I ask you, what is financial information that we really communicate? ඇත්තට මොනවද මේ අපි communicate කරන financial information? We talk about we communicate financial information, we communicate financial information. Then what it really means? So if you dig deeper into this financial information, so in fact, we communicate two aspects. Regarding a particular reporting entity, we communicate the information about the economic resources and claims on the economic resources. That is one set of financial information that we communicate to the users of financial statement or the capital providers. The economic resources, it's quite straightforward. In other words, you can say it's about assets. You communication information about assets. Then on the other hand, claims on the economic resources. What is that? The claims on the economic resources, liabilities, right? And also the equity. So in simply putting, economic resources, yes, very correct, economic resources and claims on the economic resources. So simply putting, it's about asset, liabilities, equity. So you communicate information about asset, liabilities, equity. Then through which you communicate that? You communicate the asset, liabilities, equity information through statement of financial position. You know that. So when it comes to the general purpose financial statement, one of the main statement that comes under that, the statement of financial position. So there we communicate the asset, liability, and equity information. Then on the other hand, we are talking about another important aspect, right? On the other hand, we communicate another information. What is that? That is about changes in economic resources and claims. At the beginning of a particular period, you may be having a set of economic resources and the claims on these economic resources. Then, throughout the period, this particular economic resource and the claims on the economic resources change. It basically changed due to two reasons, right? The equity of an organization, right? At the end of the day, asset minus liabilities is going to be the equity. So the equity of an organization can be changed due to two reasons. The one is about the financial performance. The other one is about other events and transactions. You know, the equity or the economic resources and the claims of an organization can be affected due to the financial performance. The financial performance is nothing but the profit or loss. Then through which you communicate the profit or loss information, that is through the statement of profit or loss and other comparison. It's about the financial performance. Then apart from that, what is the other factor that influence change in the economic resources and claims? That is going to be the other events and transactions, like the issuance of equity, the issuance of debt. So those are the other transactions. So that is captured by the statement of changes in equity. Largely, it is captured by the statement of changes in equity. So that is about the changes in economic resources. And if you want to see that change in the economic resources and claims from a cash point of view, you know, three of these statements is prepared on the accrual basis. Statement of financial position, profit or loss, changes in equity. It is from an accrual basis. But if you want to see the changes in the economic resources and claims from a cash point of view, that is the statement of cash flow would serve the purpose. So likewise, now you would see what is the relationship between these financial statements and the objective of financial reporting. So at the end of the day, each of these statements are serving broadly the objective of financial reporting. So this is the pretty much important link that you need to know. So now you should make perfect sense what is the objective of financial reporting and why we have these separate statements. So that is to communicate the financial information, right? So it is about the objective of financial reporting. So that is the most important thing. Then another important thing, this is quite new. In 2010 conceptual framework, we have not touched on this reporting entity. In fact, we have tried to uh, explain that, but it was not quite comprehensive, or I would say that it was not uh, completely agreed. So therefore, in the 2010 conceptual framework, this aspect couldn't be addressed properly. But when it comes to 2018 conceptual framework, we address this issue. What do you mean by a reporting entity? You would find that in the definition, you saw that we need to provide the financial information about the reporting entity, right? So we used to say that reporting entity term there, but we were not quite clear with what this reporting entity. So when it comes to this 2018 conceptual framework, it helps us in making a perfect sense of what do you mean by reporting entity. It's not that difficult. It says that the reporting entity is an entity that chooses, right? This is the keyword. It's a reporting entity. Reporting entity is an entity that chooses or is required to prepare general purpose financial statement. So the two keywords, if I'm to highlight, that is going to be this. It is an entity that chooses, either chooses. If you wish, you can prepare the general purpose financial statement, irrespective of the form of the business. If you really want to do that, you can do that. And on the other hand, there are certain entities who would require to prepare the general purpose financial statement. So therefore, this definition captures both the parties, the entities that chooses voluntarily or the entities that who need to prepare the general purpose financial statement mandatory. So if you are to consider, then who are the entities that need to prepare general purpose financial statements mandatorily? Those are largely the specified business entities, SBs, right? So that is as per the, what is that? It is Sri Lanka Accounting and Auditing Standards Act number 15 of 1995. It identifies certain entities, the public listed entities, the insurance companies, the banking companies, the finance companies, stockbrokers. Uh, Likewise, there's a kind of a long list, right? So those entities would require to prepare the general purpose financial statement. In the sense, applying the Sri Lanka accounting standards, the SLFRS and LKSs, they do have to prepare that. So it is there. Then on the other hand, there can be certain entities who would choose to prepare the general purpose financial statement. Say that there are certain public listed, private limited companies. So if they do not falls under the definition of this specified business entities, they don't have to prepare the general purpose financial statements. But so if they choose us, yes, they can prepare the general purpose financial statements. They can prepare the general purpose financial statement. So therefore, this is quite a comprehensive definition. It captures the essence. There can be entities who would mandatorily require to prepare the financial statement, and at the same time, there can be some entities who may voluntarily think of preparing the general purpose financial statement. If they choose to do so, yes, they can do so. Then further it says that a reporting entity is not necessarily a legal entity. It doesn't have to be a legal entity. We are talking about the substance. In accounting, it's not about the legal form. It's all about the substance. When it comes to the reporting entity may or may not be a legal entity. So if you take a kind of public listed entity, it is a kind of entity that is registered or that is registered under the Companies Act. So it's a legal entity. So therefore, public listed entity, it's a legal entity. But if you take a kind of a group scenario, if you take, say that there is a public listed entity, let's say A PLC. So the A PLC, if they acquire the majority of the shares of B PLC, then A and B would become a group. So when it comes to this group, it is not a legal entity. It's a kind of an entity that we have created for the purpose of accounting, right? But when it comes to this, according to this definition, it's a reporting entity. So that's why it says that reporting entity is not necessarily a legal entity. It can be a legal entity, but even it can be other than that. Even the accounting entities, what we may form, the economic entities, what we may form, can be a reporting entity. So the classic example is the group of companies. They are not legal entities, right? The individual entities involved, yes, they are legal, but as a group, no, they are not. But it's a reporting entity. Similarly, you would find that there can be instances of associates. There can be instances of joint ventures. That is not a kind of entity, but it's a portion of an entity. Then again, under the group financial statement point of view, those are also going to be the reporting entities. Yeah. General purpose financial statement means disclosing information to the public. Yeah. Good. So you're asking that the preparing general purpose financial statement means disclosing information to public. Yes. So in a way, yes, you are correct. The general purpose financial statement means those are the financial statement that is intended to meet the needs of users who are not in a position to demand the information they want from an organization. Hence, they depend on the information that the management communicated to them. Yes. Then accordingly, when it comes to this general purpose financial statement, it is the financial statement that is in the public domain. අනිවාර්යයෙන්ම මේ general purpose financial statement කියන්නේ public domain එකේ තියෙන දේවල්. ඒතර උදාහරණයක් විදිහට අපි public listed entities ගත්තොත් ඕනම කෙනෙක්ට investor කෙනෙක්ට ඕනම කෙනෙක්ට not the investor even you and me if we are not the investors we can access those financial statements. එතකොට general purpose financial statements කියන්නේ public domain එකේ තියෙන information වලට නෙමෙයි general purpose financial statement කියන්නේ ඒකට definition එකක් තියෙනවා. නමුත් මේ information publicly available, right? Yes, it is publicly available. So the general purpose financial statement has a separate definition. Those are the information, the financial statement that is intended to meet the needs of users who are not in a position to demand the information that they want from an organization. Hence, depend on the information that the management communicate to them. And that is what the general purpose financial statement, and that is available in the public domain. Yes, very correct. Then coming back to this economic entity, the reporting entity, it need not to be a legal entity. It can be a group of entities, and even that can be portion of an entity. Let's say that you have a particular entity. Let's say your entity is entity, let's say Z, and you acquire say 30% of the shares of entity X. Then entity X and entity Z, so they become a kind of a group over there. So therefore, that portion of an entity would be attached to you. So in that, you may apply the equity method of accounting, and then you prepare the financial statement considering your entity, that is entity Z, and the X entity, the part of that you are going to take the part of the profit that is going to be attributable to you. So it's a portion of an entity. So likewise, it's a very comprehensive definition. එතකොට මේ reporting entity එකක් කියන එක අපි කියනවා legal entity එකක් වෙන්න අවශ්‍ය නැහැ. ඒකට legal entity එකක් කියන්නේ, so for example an entity that is formed under the Companies Act, it's a legal entity. So likewise, if a particular company or entity that is formed under a particular act or an ordinance, so it's going to be a kind of a legal entity. But for this purpose, the reporting entity need not to be a legal entity. The financial statement provide information about the asset, liabilities, equity, income, and expenses generated by the set of economic activities that lie within the boundaries of the reporting entity. Right? So here, once you agree on the reporting entity, so what you have to do, you need to communicate the asset, liabilities, equity, income, expenses relating to the economic activities that lie within the boundary of the reporting entity. And that is going to be your scope. If you take an annual report, you would find from the very beginning what is the reporting entity. So they would clearly mention this is our reporting boundary. They need to mention about the boundary. Then you know when you are referring to this financial statement, you are referring to the financial statement of the group of entities, or is it the individual entity? You know that. Disclosing information to the public, attracting investors. Yes. So in a way, when it comes to the general purpose financial statement, it has the several purpose. One of the main purpose is about facilitating the investors, lenders, and creditors with their resource allocation decision. So therefore, in a way, you can say that, yes, they are to attract some of the shareholders. In the sense, that is one thing, because in the definition, we talk about the prospective investors. The prospective investors in the sense the potential investors. So therefore, in a way, general purpose financial statement can be attractive to these potential investors, so they may think of investing. But apart from that, the most important thing is about there are kind of existing investors and the existing lenders and also the creditors. So they need to make certain decision. So they need to make certain decision. So therefore, we need to discharge our accountability towards them. So that as the existing investors, you might need to sometimes, if the financial performance is not good, you may think of get rid from the entity. If the financial performance is good, you may think of purchasing more shares. So that's the kind of decision that you would make. As a lender, again, think about providing more uh, capital, providing more loans, or requiring the entity to settle the loans. Likewise, so the different decisions are there. So the decision usefulness is the most important thing about the general purpose financial statement. We are here to help the resource allocation decision of the users. In that way, there can be a kind of a attracting the investors as well. Good. So it's good that you are coming up with questions. Appreciated. Right. Now let's move on to the second important aspect. It's about the qualitative characteristics of useful financial information. Now we agree on the objective of financial reporting. Then we mentioned that we want to provide the useful financial information to the users of financial statement or the capital providers. Then how a particular information that we provide be useful. So අපි agree වුණා අපිට අවශ්‍ය useful financial information දෙන්න කියන එක. ඒකට අපි සපයන තොරතුරක් කොහොමද useful වෙන්නේ? For a particular information to be useful, for a particular financial information to be useful, it has to have certain qualities. There are some fundamental qualities as well as enhancing qualities, right? For information to be useful, it should at least have the relevance and the faithful representation. That is fundamental. That is the essence. And at the same time, it is good that if a particular information that you would provide has these enhancing qualities, it will enhance the usefulness. And that's why we call it enhancing qualitative characteristics. It will enhance the usefulness of the information. So this is fundamental and this is enhancing. Now we'll take one by one and just see what these qualities would mean. What do you mean by relevance? The relevance means the information that you would provide in the financial statement must be capable of making a difference in the user's decision, right? The information that you would provide has to be capable of making a difference in the user's decision. අපි සපයන තොරතුර පුළුවන් වෙන්න ඕනේ difference එකක් ඇති කරන්න user ගේ decision වල. Then how a particular information is capable of making a difference? That particular information should possess three qualities, sub-qualities. So the information should have a kind of a predictive value, right? In that sense, based on a particular information, you must be able to make a forecast. The user must be able to make a forecast. For example, if you take the current year sales, and you can see that the comparable information is there, the previous year sale is also there. By looking at these sales figures, you must be able to forecast what should be the next year sale of this particular entity. That is called the predictive value. By referring to the sales, you must be able to forecast sale in the next year. By referring to the profit figure, you must be able to forecast what's going to be the profit or loss in the next year. It is the predictive value. That is the quality of the information. And at the same time, the information should have to have a confirmatory value, or we call it the feedback value. What is that? So like you did this forecast in the previous year, you would have forecast the current year's sales. So once you receive the financial statement for the current year, Now you can compare the prediction that you make in the previous year about the current year sales with the actual sales. Then you can see to what extent that your prediction has worked. That is the confirmatory value. නේ? ඒත් අපිට පුළුවන් වෙනවා කරන්ට් එකේ සේල් ෆිගර් එකක් දිහා බලලා ඊළඟ අවුරුද්දේ සේල් එක ෆෝකාස් කරන්න. ඒතකොට ඒක තමයි ප්‍රෙඩික්ටිව් වැලියු. ඒතකොට ওই විදිහටම අපි පහුගිය අවුරුදු වල ෆයිනෑන්ෂියල් ස්ටේට්මන්ට්ස් වලට රිෆර් කරලා මේ අවුරුද්දේ සේල් එක ෆෝකාස් කරන්න. ඒතකොට ඒක අපි ප්‍රෙඩික්ෂන් එක. ඒතකොට මේ අවුරුද්දට දාන ෆයිනෑන්ෂියල් ස්ටේට්මන්ට්ස් ආවහම අපිට අන්න අපි ප්‍රෙඩික්ෂන් එක කම්පෙයාර් කරලා බලන්න පුළුවන් ඇක්චුවල් ඉන්ෆර්මේෂන් එකත් එක්ක. Then we can see to what extent that we were accurate. Again, that will help us to improve our decision making then to make better predictions. That is about the relevance. The information, if it is having a predictive value and a confirmatory value, it can make a difference in the user's decision. It can make a difference in the user's decision. So therefore, as the management of an organization, the board of directors, what you should try to ensure that you are trying to provide the information that is capable of making a difference in the user's decision. So that is what the relevant information is about. It's about the judgment. It's all about the judgment. You have to use your judgment. And in doing so, in exercising so, the accounting standards would help you. So මෙතන තියෙන judgment එකක්. හැබැයි අපිට gray area එකක් නෙමෙයි. accounting standards වලින් අපිට හොඳටම guidelines දීලා තියෙනවා. මොන informationද වැදගත් වෙන්නේ. දැන් අපි PP standard එක ගත්තොත් අපි disclose කරන්න ඕන information මොනවද කියන එක standard එකේ කියනවා. ඒකට ඒව තමයි relevant information. So therefore, if you simply follow the accounting standards and if you do so, then you have ended up achieving the relevance. And at the same time, the information has to be material. It's a kind of entity-specific judgment, entity-specific thing, the materiality. So materiality in the sense it's the misstatement or the omission of a particular information. If it affects the decision-making of the user, it's a material information. So therefore, the relevance would means that materiality, the information has to be material. Then when you come to faithful representation, it's about the representation of the economic phenomenon. So you must need to represent the substance of the economic phenomenon faithfully. You need to faithfully represent the economic phenomenon, the substance of the economic phenomenon, right? So in accounting, we are talking about the substance over the legal form. Yeah, the connection was little interrupted. The connection was interrupted. Now, is it fine? Can you hear me properly? Hope you are fine, right? Okay. Right. I still, it's going on. No, fine. Okay, right. Thanks. Right. When it comes to the faithful representation, what I said that it's about representing the substance of the economic phenomena faithfully. You want to represent the economic phenomena faithfully. So, you know, in accounting, we are talking more about the substance. So it's not the legal form, no? Especially if you take that the leasing. So if you had acquired a particular asset under a lease, you know, the economic form, so the legal form, you may not own the asset until you pay the last installment. But in substance, you are taking the benefit out of that. In the sense, you are experiencing the risk and rewards. So that's why we are reporting that. That's why we are presenting them in the financial statement, because we are representing the substance. Hence, the faithful representation is about the presenting the substance of the economic phenomenon, substance of the economic transaction. Api substance එක තමයි පෙන්වන්නේ. Most of the time, the economic form may be equal to the substance, but if the substance is different from the legal form, still we need to focus on the substance. It's not the legal form. For a particular information, for us to claim that particular representation is a kind of faithful representation, that has to be complete. The information what you would provide must be complete. So, in financial statement, we are trying to provide the things in numbers, in words, right? When it comes to the financial statements, we are putting the things in numbers. When it comes to the disclosures, we are explaining the things. So it's more or less the words. So likewise, we are trying to make a kind of a complete depiction. Then the information has to be neutral. So we are not biased, right? When it comes to the presentation of the assets, liabilities, equity, income, expenses, we have to be neutral. So this is, there also we can uh, think of the prudence. So in the prudence concept, we say that we are not going to overstate the assets and income and understate the liabilities and expenses. So that is applicable for this neutrality. But again, so in the prudence concept, so sometimes we mistakenly think that it's all about not overstating the assets and income and understating the liabilities and expenses. No, that is not the case. Even we should not understate the income and assets. Similarly, we should not overstate the liabilities and expenses. ඒතර කෙනෙක්ට හිතෙන්න පුළුවන් දැන් අපි ප්‍රූඩන්ස් concept එක කිව්වම ගොඩක් වෙලාවට අපි ඉගෙනගෙන තියෙන්නේ හුරු වෙලා තියෙන්නේ අපි කියනවා වත්කම් සහ ආදායම් අපි ඕවර්ස්ටේට් කරන්න එපා කියන එක සහ වියදම් සහ වගකීම් අන්ඩර්ස්ටේට් කරන්න එපා කියන එක. නමුත් එහෙම වුණත් අපි ඇත්තටම බයස් නේ. ඒතර මේක නෙමෙයි ප්‍රූඩන්ස් වලින් කියන්නේ. ප්‍රූඩන්ස් වලින් ඔය දෙපැත්තම කතා කරනවා. ඇසෙට් සහ ඉන්කම් ඕවර්ස්ටේට් කරන්න එපා වගේම ඇසෙට් සහ income understate කරන්නත් එපා. liabilities උත් එහෙමයි overstate liabilities සහ expenses understate කරන්න එපා වගේම liabilities සහ expenses overstate කරන්නත් එපා. ඒක තමයි unbiased එහෙම නැත්නම් neutrality එක කියන්නේ. So therefore the neutrality is more or less the prudence. And also you can't afford to have errors. So it must be free from errors. The free from errors, right? That is also the case. So therefore, particular representation to be faithfully represented, you must be able to show that the completeness is there, the neutrality is there, the free from errors is there. You can think about taking a particular example, particular item. If I put it like, say, that you are thinking about the PP, think about the representation of the PP, presentation of PP. In that, you would find that when it comes to the statement of financial position, you may show in the face the PPE carrying amount. But there, it's a very kind of a summarized information, right? So because of that, to give a kind of a complete picture, what we are doing, we are providing the PPE note. In the PPE note, one can look at the cost information and the individual assets that is involved there, and also the depreciation information, the accumulated depreciation, the carrying amounts, those information can be seen. So therefore, in order to ensure the completeness of this PPE, so we are providing a PPE note. Apart from that, even we need to disclose the accounting principles what we have applied for the PPE. You would find that if you take a typical annual report, you would find that we are disclosing what are the principles, what are the policies that we have applied for the PP. That is also important for us to make a kind of a complete sense out of the PP. So therefore, when it comes to this faithful representation, it's about presenting the information completely. ඒතර අපි දකිනවා දැන් PP වගේ දෙයක් ගත්තොත් අපි විවිධ disclosures කරනවානේ. ඒතර ඒ තුලින් අපි achieve කරන්න උත්සාහ කරන්නේ මේ කියන faithful representation. අපි නිකම්ම PP කියලා යම්සි amount එකක් statement of financial position එකේ දාලා නිකන් ඉන්නේ. අපි ඊට අමතරව PP note එකක් කියලා දෙනවා. ඒතකොට ඒකේ තියෙන ඔක්කොම detail තොරතුරු. තියෙන සියලුම assets මොනවද, ඒ වගේ depreciation කීයද, cost එක කීයද, fair value එක කීයද, මේ ඔක්කොම තියෙනවා. ඊට අමතරව PP සම්බන්ධයෙන් අපි අනුගමනය කරන policies. අපි revalue කරේ මොනවද, revalue කරා නම් ඒ revaluation එක කරේ කොහොමද, මේ වගේ සියලුම විස්තර අපි ලබා දෙනවා. And that is what we call the completeness And that is part of the faithful representation. Again, when it comes to the selection of accounting policies, we should not be biased. So, so in accounting, if you really wish, so there are certain instances where we can use our judgment and we can kind of distort the financial or the true performance of an organization. So the real picture, you can distort the picture of an organization. But you should not do that. You must be neutral. You should not be biased towards the management, towards the investors. You should not be biased. You must be neutral. And also you can not afford to have the errors. So it's about the faithful representation. In a particular representation, if you find that the completeness, neutrality, and the free from errors is there, it's a faithful representation. Then it represents the substance. It represents the substance, faithful. The fundamental qualities. That is the fundamental qualities. Then when it comes to the enhancing qualitative characteristics, I told you that this is going to enhance the usefulness of the financial information. The information must be comparable. The comparability has two aspects. It must be comparable over time, and it must be comparable across entities. So you must be able to compare the financial statement of the current year with that of the previous year. And also you must be able to compare the financial statement of your entity with that of another entity. Then the verifiability, the knowledgeable and independent observers could reach consensus, but not necessarily the complete agreement. You must be able to verify. So whatever the information that is there in the financial statement, you must be able to verify. For example, if you could find that particular PP item is revalid, particular PP item is revalid, then depending on the information that is provided in the disclosures, you must be able to come to a kind of a reasonable estimate that the particular representation, it's going to be a faithful representation. So අපි දකිනවා financial statements වල සමහර asset revalue කරලා තියෙනවා. ඒකට ඒ revalue කරා නම් ඒ revalue කරපු asset පිළිබඳ විස්තර අපි දෙනවා. ඒකට ඒ විස්තර භාවිතා කරලා inputs භාවිතා කරලා අපි reasonable විදිහට work out කරලා බැලුවොත් ඒ කියන PP item එකේ අපිට හම්බෙන value එකත් more or less similar වෙන්න ඕනේ. ඒකට ඒක completelyම agree වෙන්න අවශ්‍ය නැහැ. මොකද අපිට පේනවා ආසන්න අගයක් වගේ යනවා. අපේ judgment එකකට ගන්නවා. අපි හිතමු අපිට තියෙනවා there is a particular land near the Vijayarama. So let's say that it's a 10 perch land, and they have done the kind of a revaluation, and they have come to a value like say 1. Say that it's 10.5 million or something. So in that particular case, if you reasonably look at that particular representation, so if you can find that if they had provided the information about the values of the nearby lands and the number of perch involved there, then you can simply work that out. It is 10 perch, that is into the reasonable lands is valued around 1.5 million. Then you can simply multiply that, get into that particular value. It's a verification. So you must be able to do something as such. And simply, if you take inventory items, the inventory must be carried at the lower of cost and net realizable value. You may find a particular inventory item is carried at the NRV. Then if you get the NRV value per inventory item, and if you multiply them by the number of units over there, you must be able to get the value. So it is the verifiability. So that should also be there. And also the information what you may provide has to be timeliness. So in the sense, the information must be available at the time of making the decisions, in order to ensure that you would find that when it comes to the public listed entities, they may provide what you call that interim financial reporting. So nowadays, it's a requirement, in fact, regulatory requirement as well. They need to provide that the timely information. In order to provide the timely information, they engage in interim reports. And even the financial statements must also be published after a reasonable time of the year end. Most of the time it's 31st March or 31st December. So after some time, within a reasonable time, you must need to publish the financial statements. Then understandability. So in order to enhance this understandability, we would find that the information that contains in the financial statement, they are classified as, especially if you think about the expenses, the administrative expenses, finance and other, and the distribution. Likewise, the classifications are there, and also the assets are classified, current and non-current, liabilities are classified, characterized, and present information clearly and concisely. So that is to enhance the understandability. So this is about the qualities that the useful financial information should possess. So when you're providing the information, you need to focus about these qualities, especially the fundamental qualities. Then it is good to have these enhancing qualities as well, right? So it will enhance the usefulness. Okay, it's about the qualities. Right, now we have a little activity. Yeah, I think it is not the proper place to give that. Let me come back to this later. I think there must be other like this one. Okay, let us try the activity 3. Which of the qualitative characteristics of financial information is applicable in the following situation? Right, you can attempt that. 1, 2, 3, 4 items are there. You can take 2 to 3 minutes. Take this as 1, 2, 3, 4 and indicate your answer. මේවා 1 2 3 4 විදිහට ගන්න. එතන ඔයාලගේ answers ටික පෙන්වන්න පුතල. quickly. Right. So it's good that you have attempted. Okay. So let's see. The first one, assets are revalued at their fair value when recognized in the financial statement. So when you revalue the asset, which quality is affected the most? So when the assets are revalued, you are going to provide very up-to-date information. So if you are providing kind of up-to-date content, it means more relevance, isn't it? So it means more relevance, right? So therefore, for the first one, yes, we can take the relevance. We can take the relevance, yes. Then the second one, asset purchase under finance lease. In fact, now we don't classify in the books of lessee as the finance or operating lease. Let me say it's a lease. Huh? Asset purchase under a lease are recognized in the lessee's financial statement. So it's about presenting the substance. It's the substance, the economic transaction. You are showing the substance. So if you do so, what will affect the most? As we discussed earlier, it's about the faithful representation. Yes, you have taken it, faithful representation. The third one, the valuation basis of year-end inventories changed to weighted average from 5.4, which has been used in prior period. So valuation basis of year-end inventories changed to weighted average from 5.4. So you have earlier used the 5.4, now you have changed to weighted average. In that sense, you can take sometimes you can achieve the comparability in the sense that, let's say, the industry players are using this weighted average for the inventory valuation. So if you are doing the same practice, just simply adopting the same practice, in a way it will improve the comparability. Or sometimes or otherwise you may be trying to presenting that even the relevance can also be affected, isn't it? So by moving on to a kind of a measurement basis, you may be trying to be more or otherwise faithful representation. Yeah. So even you can say, yeah, faithful representation would make the more sense, right? You are moving from a different basis. You are trying to faithfully represent a particular phenomenon. You may be trying to represent a particular phenomenon faithfully. So in that sense, yeah. So you can think of the faithful representation. So it's a subjective call. You can say the comparability, faithful representation. Both can be taken. What you thought of? It thought of timeliness, the faithful representation. You good? Yeah. So it is the faithful representation. Good. And the comparability, even you can take it if they are trying to be consistent with the industry practices. Then the assessment of the carrying amount of year-end inventory presented in financial statement based on its cost. You're going to assess the carrying amount of the year-end inventory. You have a set of inventory at the year-end. Now you are going to assess the carrying amount based on the cost. It's a kind of a
Faithful presentation.
yeah faithful representation, and most closely we can say verifiability even, isn't it? It could be the verifiability. We are going to assess, make a kind of assessment of the carrying amount of the inventory presented in the financial statement based on its cost. You can, yes, faithful representation can be the case, as well as the verifiability is also there. Now you can verify. It's a kind of assessment. It's not the kind of measurement, but maybe that in the tapi assess karna. So agreement relap karanne, assess kirimak karanne based on the cost. So it means verifiability as well. Verifiability, faithful representation. So good that it's a very subjective call, but yes, you can make a kind of a, so these scenarios are not pretty much explained enough. So therefore, the judgment is involved. You can make a reasonable call, right? Okay, good. So it's about the qualitative characteristics. Now we are moving to another interesting area. So in fact, again, this is an area that is heavily affected by the new conceptual framework. It was different from the 2010 conceptual framework. These definitions were refined. So we are going to discuss that. So before that, anything that you would like to get clarified? So before we moving on to that, anything that you would like to add or anything that you would like to get clarified? Yeah, this is the time. Okay, then let us move on. Fine, seems that you are fine. Right. I think that you are familiar with the 2010 conceptual framework definition of these asset liabilities, equity, income, and expenses. But I'm going to focus much on the revised definition. In 2010 conceptual framework, when it comes to the definition of the asset, the main emphasis was on the flow of economic benefits. So in fact, this is what they have highlighted the most. In the 2010 conceptual framework, they used to say that asset is a resource controlled by the entity as a result of past event and from which future economic benefits are expected to flow to the entity. Yes, there's a question. In the relevance and faithful representation, there are 4 key points to consider. In the sense, 4 key points mean is that yeah, when you come to the fundamental qualities, we are talking about the relevance and faithful representation. These are the sub qualities that comes under this. 3 sub qualities over here and 3 sub qualities under the faithful representation. But this is the fundamental qualities, right? Then these are the enhancing qualitative characteristics. These are the 4 enhancing qualitative characteristics. So therefore, altogether in financial information to be useful, there are like 6 qualities. Altogether 6 qualities, right? Those are sub qualities. In the sense, these 4. No, these 4 are not sub qualities. These are enhancing qualitative characteristics. It is not a kind of sub quality, but yes, the sum of these are linked to the fundamental. But basically, we call it these enhancing qualities are there to enhance the usefulness of the financial information together with the fundamental qualities. But if you carefully look at that, the sub qualities, the enhancing qualities are linked to the fundamental qualities as well. For example, yeah, you're asking about, yeah, let me complete this. When it comes to this comparability, if the information are comparable, in a sense, that information would be relevant as well. And the information is timeliness, again, it would be more relevant. So therefore, the first 2 would be having some sort of a relationship to the relevance. And if you look at this verifiability, it is related to the faithful representation the most. And the understandability, again, that is relating to the relevance. So therefore, we can roughly draw a kind of a connection between these 2. The comparability, timeliness, and understandability is linked with the relevance, while the verifiability is closely associated with the faithful representation. Yes, coming to your question, you're asking that when it comes to this relevance and faithful representation, yes, these are sub characteristics, the sub qualities, we could say. The relevance, they are having the 3 sub characteristics, the predictive value, the confirmatory value, and the materiality. Faithful representation, yes, it includes completeness, neutral, and free from errors. So that is the essence of faithful representation. This is the essence of relevance. These 3, right? This is broadly the definition. Hope it is clear to you. Right, now we are coming to the definition. So when it comes to this definition, I told you that when it comes to the asset and even the liabilities, what they have focused more in 2010, their thinking was about they emphasize more on this, the flow of economic benefits. But at that time, haven't you noticed a kind of a mismatch? In the sense, even if you take this recognition criteria, in the recognition criteria also, they talk about this future economic benefits. So the future economic benefits are expected to flow to the entity. If we have that, yeah. So in this also, if you look at the previous conceptual framework, probability criterion also, they talk about this future economic benefit, the inflow and outflow of future economic benefit. So in that sense, isn't it a repetition kind of thing? එතන repetition එකක් තියෙනවානේ. Definition එක ඇතුළේ මේ future economic benefits flow වෙන එක ගැන කතා කරනවා. Recognition criteria වලට ආවම කතා කරනවා. So therefore it's a kind of a mismatch in fact. But over time, over the years, they have come into the realization that when it comes to the asset, the elements, the most crucial aspect is about, it's about the resources. It's about the resource. It's not about the future economic benefits. So it is taken care by the probability, it is taken care by the recognition criteria. But here we are talking about the definition. So having come to that particular mindset, in the 2018, what they have done, they make it pretty simple. Asset is a present economic resource controlled by the entity as a result of past event. No changes to the past event and controlled by the entity, but by using a one term, they have brought this future economic benefits under the resource. So instead of putting it just as the resource, they are saying that present economic resource, right? That is what their definition. Asset is a present economic resource controlled by the entity as a result of past event. So in that sense, then they define what do you mean by a present economic resource. Present economic resource is a right that has the potential to produce economic benefits. What do you mean by a present economic resource? It's a resource that is capable to produce the economic benefits. එතකොට 2010 ඉඳලා 2018 වෙනකොට කොහොමද මේ ඩෙෆිනිෂන් එක වෙනස් වුනේ, මේක රිවයිස් වුනේ? ඒක ඇත්තටම අපේ ફોකස් එක ගෙනාවා මේ ෆියුචර් ඉකොනොමික් බෙනිෆිට්ස් කියන කතාවෙන් ඉකොනොමික් රිසෝස් එක කියන තැන. ඒකට අපි මෙතන ඩෙෆිනිෂන් එකක් ගැන කතා කරන්නේ. එහෙනම් මෙතන ඇසෙට් එකක් නම් වැදගත්ම දේ රිසෝස් කියන. එහෙනම් එම්ෆසයිස් කරන්නේ රිසෝස් කියන එක. ඒකට රිසෝස් කියන එක අපි තව ඉම්ප්‍රූව් කරා present economic resource කියලා. ඒකට present economic resource කියන්නේ මොකක්ද කියන එකත් අපි ඒත් එක්කම පැහැදිලි කළා. Present economic resource කියන්නේ it's a right that has the potential to produce economic benefits. If you take a kind of PPE, you know it's an asset. PPE is a right. It has the potential to produce some cash flows. The PPE has the right. It's a kind of a legal right, isn't it? The PPE item you would have purchased. So therefore it is legally owned by the business. So therefore it's a legal right. So this PPE represents legal right. So therefore it is capable of producing some economic benefit. And if you take similarly trade receivable, it's a kind of asset. It gives you a right for a contractual right. It gives you a contractual right to cash flow. So this it's a kind of a resource. It gives you the contractual right to cash flow. So if you take a right of use asset, if you the asset that you acquired under a lease, it's called the right of use asset. It gives you a right to use the asset or right to direct the use of the asset. If you take an intangible asset, it's a right. It could be a contractual right, right? If you have a kind of a patent, right? So it will help to restrict the access of others to the economic benefits. So therefore, asset is about the resource. It's not the economic benefit that we focus, but it has the potential. When it comes to asset, asset has the potential to produce the economic benefits. Similarly, in the liability also, in the 2010 conceptual framework, their focus is on the outflow of resources. But again, it is something that is necessarily captured by the recognition criteria. So therefore, in the definition, we don't have to bother about that. In the definition, what we should highlight, it is about the present obligation. That is the crucial aspect. If it is to be a liability, there must be a present obligation. If you obtain a bank loan, you are under an obligation. It's a legal obligation, right? So if you had purchased some goods on credit, you are under an obligation. It's a contractual obligation. Likewise, you are bothering about the present obligation. So the key emphasis must be placed not on the cash flows. It's about the obligation to transfer an economic resource as a result of the past event. The past event is there, the present obligation is there. What is not there? It's about the outflow of resources. So instead, you are saying that you are under obligation to transfer an economic resource. If you had obtained a loan, you are under obligation to settle the loan installment. If you had obtained the goods on credit, you are under obligation to transfer the cash. So that is about the essence. The essence of the liability is not the outflow of resources, but the present obligation. So your focus has shifted to the present obligation. The inequity, it can't be changed. It can't be changed forever. It's all about the residual interest, the asset minus liabilities, the residual interest of the asset of an entity, right? When it comes to equity, the distinguishing feature, when it comes to liability, you have present obligation, but here we don't have any obligation, no obligation, right? It's equity, residual interest. At any point in time, if you take the assets of an entity, if you deduct the liability, if something is left, that is equity. Then if I want to talk a little further about this economic resource, in fact, we have mentioned that the resource, economic resource is a right or other source of value that is capable of producing economic benefits. So you may be having a kind of right over a physical object, like PP item. There you have a right over a physical object. So it has the potential to generate some future economic benefits or economic benefits. And also these rights, it is not just the physical objects, the right over the physical objects, but even sometimes these rights may be established by way of contract, the legislation, or similar means. So if you take a trade receivable, it's a kind of a right that is established as a matter of contract between the you and the customer. It's a contractual right. So if you take a trading license of an organization, it is a kind of intangible asset. It is established by way of a legislation. So if you take a patent, it would establish by way of, again, a legislation, right? So these are the other examples of right. And also the rights can be arise from a constructive obligation of another party. This is kind of extreme example I can take of. When it comes to the obligation, basically the legal obligation are there, constructive obligation is there. The constructive obligation is basically a obligation that goes beyond the legal obligation. So as a matter of good business practices, the organization would attend to certain obligation, and that is called the constructive obligation. If I'm just to take a kind of simple example, let's say that as a seller that you are selling a particular product with a warranty of 6 months, right? So therefore, if something happened to the product that you would sell, if a particular defect that is covered by the guarantee had come into existence, so you are liable to repair that. You're liable to attend that. But let's say that there is a particular customer that you frequently transact with, and that particular customer has bought this particular good. Let's say it's a mobile phone, and the particular defect come into appearance, come into exist after 9 months. But from a legal point of view, if you look at this, you don't have any obligation to repair that. But as a good business citizen, so depending on the relationship that you have with this particular customer, you might think of attending to that particular event. So therefore, it is clearly beyond the legal obligation. It's a constructive obligation. So in this point, if you think about it from the point of the customer, he is getting a kind of a right. He's getting a kind of right to get this particular asset repair. So let's say it's a kind of machinery, right? You are getting a particular right to get the machine repair at free of charge. So therefore, it's a kind of a right that you are getting. So that is a kind of right that arises from constructive obligation. So මේ constructive obligation එකකින් අපිට right එකක් විදිහට අපිට දකින්න පුළුවන් example එකක් තමයි අපි යම්කිසි machine එකක් අරන් තියනවා යම්කිසි supplier කෙනෙක්ගේ. ඒකට හැබැයි warranty period එක exceed වෙලා තියෙන්නේ. නමුත් ඒ supplier කැමති වෙනවා මේ ඇති වෙලා තියෙන දෝෂය repair කරලා දෙන්න. ඒතකොට ඒක customer ගේ පැත්තෙන් බැලුවොත් ඒක අපිට right එක. ඒතකොට ඒ විදිහටත් ඔය කියන right ඇති වෙන්න පුළුවන්. But it's extreme example, but just to explain you. And also, most obviously, the asset would arise as a legal ownership of a physical object. Like we discussed the PP, the motor vehicle that you have purchased, the land and buildings you have, those are the legal ownership of a physical object, right? Yes. So it's about the economic resources, how it may come into existence. So there can be different ways of how the asset can be come into existence. You can simply take a statement of financial position, look at each of the asset, and you can think of how this asset has come into existence. PPE by way of the legal ownership. The right of use asset, it is a by way of contract. Trade receivable by way of contract. If you have invested in shares, by way of contract. If you have a patent, by way of legislation. Likewise, you can think of the assets, and that will show how it has come into existence. So I'm taking some time, extra time. Would that be fine with you? So I'm simply exceeding the time that is taken. Can I take another 10 minutes time and complete the discussion? I think that's better to go ahead. Would that be fine by you? Right, okay. So let's move on. Yeah. So it's about the economic resources. Right, okay, thank you. Let's move on to the third one. It's about the income. And similarly, when it comes to this income and expenses, again, the definition what we had, it was overly complex. So in the 2010 conceptual framework, it was overly complex. But having identified that, in 2018, we made it pretty simple. We captured the substance and we made it pretty simple. So when it comes to an income, it's all about increase in asset or decrease in liabilities, which leads to increase in equity. But other than those resulting from contribution from equity holders, you know, even the asset can be increased, even if the owners make contribution, owners deposit, or what you call owners invest money in the business, you know, the asset increases, but that is not your income, right? Income is what increase your equity other than the contribution from the equity holders. අපි කියන්නේ income එකක් කියන්නේ එක්ක asset එක වැඩි වීමක්, liability එක අඩු වීමක්, equity වල වැඩි වීමක් සිද්ධ වෙනවා. Say for an example, so if you make a sale, say that it's a cash sale, so the cash increases, it's a increase in asset. So simultaneously it increases your equity. So it is income. You do a revaluation. There's a revaluation gain. Your PP increases, asset increases. At the same time, equity increases. That is your income. Similarly, you have a liability. So in the liability, when you're going to settle that, you receive a discount. So the liability decreases. At the same time, equity increases. So there's a provision, right? So the amount of the provision get decreased during the period. Yeah, liability decreases, income increases. Similarly, if the owner brings money to the business, yes, asset increases, equity increases, but that particular increase is due to the contribution from the equity holders. So therefore, in this definition, we exclude such kind of things. The transaction which increase in equity other than the transaction that we do with the owners. Similarly, the expenses, the definition has been simplified. Expense is the other way around, decrease in asset, increase in liabilities, which leads to increase in equity other than the distribution to the holders of equity. So if you pay the salaries, cash decreases, asset decreases, equity decreases. So if you uh, kind of liability, let's say that you have accrued expense, you have accrued electricity bill, you have not paid the electricity bill, liability increases, equity decreases, right? So it is a kind of expense. And at the same time, let's say that you pay a kind of dividend. Yes, asset decreases, the cash decreases, and also the equity decreases. But that is not expense. Why is that? Because it's a kind of a distribution to the holders of it. So therefore, the transaction will decrease the asset and increase the liabilities, which increase the equity. We decrease the equity is the expenses, but other than those distribution to the holders of equity. So it's about the definition of equity. So definition of expenses. In a way, you can see that the definition on income and expenses has been pretty simplified. So they have refined the thinking. They have keep it more simple. Then we come to the recognition. Yeah, this is another important area. So when we come to the recognition, in the earlier 2010 conceptual framework, if you take, we had this probability criterion and also the reliability criterion, we call it, right? For a particular asset, uh, liability, income, expense, equity to be recognized, it has to meet the probability criterion and also the reliability criterion. But when it comes to the 2018, you can see that it's a drastic change, I would say. We are no longer having this probability criteria. And also, we are no longer having this reliability criteria. So it is replaced by the relevance and faithful representation. In a way, you can see that this new conceptual framework is trying to align this recognition criteria to the fundamental qualitative characteristics, then to the objective. So therefore, they are trying to make a kind of a logical relationship, logical link they are trying to create. එතකොට පේනවා අපිට 2018ට ඇවිල්ලා බැලුවොත් මොකක්ද කරලා තියෙන්නේ qualitative characteristics, sorry, recognition criteria තමයි particular asset or liability, income, expense, and equity must be recognized only if it provides the relevant information about the asset, liability, and about the resulting income, expenses, and equity, and also a faithful representation of the asset or liability and of any resulting income, expense, and the change in equity. Simply putting, it talks about the relevant particular item of financial statement to be recognized. It should provide the relevant information, and also the information must be faithfully represented. So therefore, it is about the relevance and faithful representation, right? Hence, what they have tried to achieve, they have tried to link that to the what you call the fundamental qualitative characteristics, thereby to link the objective. So objective එකට ගොඩක් link කරලා තියෙන බවක් අපිට පේනවා. එතකොට in a way they are trying to achieve a kind of a synchronous development is there. So there is a kind of synchronous development, right? But it was not there in the 2010 conceptual framework. From a theoretical point of view, we can say that they are trying to achieve a kind of logical relationship. But that is not the only reason why this particular change has been made in 2018. There was another practical reason why they had changed this recognition criteria. That was because when it comes to this probability criterion, especially, it was applied inconsistently. When it comes to the accounting standards, throughout the accounting standards, the application of this probability criterion was inconsistent. එතකොට අපි ඇයි මේ recognition criteria වෙනස් කරන්න බලපුව තව හේතුවක් තමයි ඇත්තටම අපි accounting standards ගත්තොත් ඒ accounting standards වල මේ probability criterion එක apply කරලා තිබුණේ inconsistent විදියට. For example, you know, when it comes to the contingent liabilities, in the individual financial statement, we do not recognize, right? when it comes to contingent liabilities, we know that it is not probable that the future economic benefits will flow to the entity. So since we may not recognize, simply disclose that. But if you think about the same contingent liability in the consolidated financial statement, what you would do, irrespective of the recognition criteria, you recognize that. Now, contingent liability ka group scenario එක තිබුණා. Accounting standards කියනවා SLFRS 10 and SLFRS 3, it will guide that the contingent liabilities must be recognized. Isn't it inconsistent? When it comes to the individual financial statement, LKS 37 says that no, you should not recognize the contingent liability. But when it comes to the group scenario, SLFRS 3 and SLFRS 10 says that contingent liabilities has to be recognized. So that is one. Another thing is that when it comes to the contingent assets, so for a particular contingent asset to be recognized, right, contingent asset usually we disclose, but for a contingent asset to be recognized, it says that it has to be virtually certain. When and only when the contingent asset become virtually certain, that can be recognized. Then they are introducing a new principle, new recognition criteria. It's virtually certain, but that is not there in the original recognition criteria. That is another inconsistency. And similarly, if you think about the asset held for sale, SLFRS 5, that says that for a asset to be classified as held for sale, the sale has to be highly probable. That is another criteria. The sale has to be highly probable. Again, another inconsistent application. So again, if I'm to take another example, if you take kind of what do you call that, LKS 12, so that is about the income taxes. In that, when it comes to the recognition of deferred tax assets, if you are to recognize a deferred tax asset, it says that you should recognize the deferred tax asset to the extent that future profits are available. But when it comes to contingent tax liabilities, no problem. If you have a present obligation, you can recognize. But for the asset, that is not the case. It's different. So in that sense, this application of probability criterion was inconsistent. Having seen this particular limitation, the International Accounting Standards Board, they have revised this conceptual framework. That is another practical reason. So now all what you have to do is, when it comes to a particular recognition of a particular item, you have to see whether it is provide the relevant information. When it comes to providing relevant information, in some instances, even though the probability of that particular flow of economic benefits is low, but that information can be relevant. If you apply that particular logic to the contingent liability. So when you come to the individual entity, yes, contingent liability may, you can simply treat them as disclosing. But when it comes to the group scenario, especially when it comes to the valuation, these contingent liabilities would be crucial, right? So therefore, even though it is less probable, the probability is less, but it still can be relevant. So now you can see that this relevance is quite broader than this probability criteria. එතකොට දැන් අපි දැන් බලන්නේ අර probability කියන ඒ narrow mindset එකෙන් නෙමෙයි. දැන් අපි බලන්නේ යම්කිසි information එකක් relevant නැද්ද කියන එක. දැන් ඒක apply කරපුවාම අපිට ওই කතා කරපු අවස්ථා justify කරගන්න පුළුවන් නේ. දැන් අපි individual financial statement එක contingent liabilities අඳුනගන්නේ නැහැ. ඒක අපි දැනට කියන probability එක අඩුයි කියලා. නමුත් ඒක අපි ගත්තොත් relevance එක පැත්තෙන් කියලා ඒක relevance එක අඩු දෙයක් වෙන්න පුළුවන් individual entity. හැබැයි accounting standards වලින් කියනවානේ අඳුනගන්න කියලා group scenario එක contingent liability එක recognize කරන්න කියනවා. නමුත් එතන ඇත්තටම ලොකු relevance එකක් තියෙනවා. මොකද අපි දන්නවා group scenario එකදී valuation එකදී මේ liabilities ගොඩක් crucial වෙන්න පුළුවන්. contingent liability එකක් කියන්නේ ඇති වෙන්නත් පුළුවන් නැති වෙන්න. බැරි වෙලා හරි ඕක ඇති වුණොත් ඒ තුලින් විශාල බලපෑමක් වෙනවා අර ඇක්විෂන් එකට. ඒ ඇක්වයර් කරන ප්‍රයිස් එක ඩිටර්මින් කරද්දී කන්සිඩර් කරන එක හොඳයි. එහෙමනම් අපි බ්‍රෝඩර් පර්ස්පෙක්ටිව් එකකින් මේ කියන කාරණාව දිහා බැලුවොත් ඒක relevant information. So because of that, they are asking to recognize that contingent liability. So hence, I cannot say that, or we cannot say that the probability criterion is no longer there. So in fact, the probability criterion is there. You know, if the probability of a particular uh, cash flow is quite high, so then that is definitely going to be a relevant information. For යම්කිසි වත්කමක හෝ වක්කීමක cash flow එක ගොඩක් probable නම් ඒක අනිවාර්යයෙන්ම relevant information එකක් වෙනවා. So if you take a kind of a PP item, so if it is having kind of a probable cash flow, if the probability is quite high, then that is certainly going to be a relevant information. But at the same time, there can be instances where even the probability is less, still that information can be relevant. That is the most important thing, right? So සමහර අවස්ථා තියෙන පුළුවන් probability එක අඩු වුණත් ඒක වැදගත් වෙනවා. The classic example, contingent liability recognition. So ඒක ගොඩක් crucial aspect එකක්. ඒ නිසා ඒක relevant කියන දෘෂ්ටිකෝණයෙන් බලපුවාම ඒක වැදගත්. So we consider that. Then the faithful representation. Again, you cannot say that this cost or value, the measure or the reliability criteria is no longer there. In fact, that is included in the faithful representation. When it comes to the faithful representation, the most important thing is the measurement, measurement with certainty. So the instances where there is a kind of measurement uncertainty, you would say that the faithful representation may not be there. Faithful representation may not be there. So අපි කියන්න බෑ මේ cost සහ value reliability criterion එක නෑ කියන එක. නමුත් ඒකත් ඇත්තටම මේ faithful representation එක ඇතුලේ තියෙනවා. ඒතර මෙතනදී අපි කතා කරන්නේ measurement with certainty කියන එක. ඒතර අපිට පේනවා නම් යම්කිසි transaction එකක් there's a high measurement uncertainty, we say that the faithful representation is not there. For example, if you take a kind of, let's say that it's a brand, right? So there's a, say, think about the Coca-Cola company, right? So in the Coca-Cola company, you know, there is a huge brand value, undoubtedly, right? It's worth billions. So if you provide that information through the financial statement, would that information be a relevant information to the investors? අපි හිතමු අපි Coca-Cola brand එක value කරලා report කරනවා. ඒ information එක relevant වෙයිද? What do you think about that? The Coca-Cola brand, we are going to value it and we are going to provide that. Would that be relevant? No. Is that? So don't you like to see that the brand value, so which comes at $1 billion of the company? I think certainly the investors would really value that, isn't it? It's a brand value, right? Certainly there's a kind of relevance because it's a pretty much important information, right? The relevance is there. But the problem is that, you know, in the accounting standard, we are not allowed to recognize the internally generated brands. The problem is that it is with the faithful representation. Can we reliably measure that? You know, brand is an intangible asset. The standard says that the brand has to be measured at its cost. Can you reliably say what is the cost that you have incurred to create this brand? You cannot agree on that. So that's why we are not recognizing the brand. It's about the faithful representation. So there is a measurement uncertainty. So therefore the faithful representation talks about the measurement uncertainty. So it is more or less, it's about the measurement with reliability, measurement with certainty, right? So that is the kind of example. It's kind of, yes, you have made the point very clearly. Then I'm questioning why we cannot recognize these internally generated intangible assets. That because it failed to satisfy the faithful representation. It is not because it is not relevant. In fact, it is relevant. The problem is with the faithful representation, right? Right? You need to think, you need to question the accounting standard. That is what is expected. So you need to go and explore why it is said. You should not take the things for granted. And even it says that the employee, the training, the training expenses should not be capitalized. It is not allowed. In the sense, you are not supposed to recognize it as an asset. Then again, if you question that, where's the problem? What is the problem with that? It's about the low probability. So when it comes to these employees, having taken the particular training that is being offered, what if they leave the organization? So therefore, when it comes to the future economic benefits, the probability could be low. So therefore, that information may not be relevant, broadly speaking. So that's why we should not recognize the employee training as a kind of asset, right? Likewise, you should question the things. Yes, we don't have the control over the human resource. In the sense, it means we don't have the control, mean they can leave the organization. So if they leave the organization, that means the low probability, low probability. So likewise, you can bring that to this two recognition criteria, right? So therefore, we should not radically say that its probability and the cost and the reliability criteria is no longer there. But if you carefully look at, it is simply being embedded, but taking a broader perspective. Because if the probability of a particular cash flow is high, cash inflow or outflow is high, certainly it's going to be a relevant information. But at the same time, there can be instances where even having a kind of a low probability cash flow, cash inflow, outflow, that information can be relevant. The classic example, the contingent liability recognized in group scenario. And the faithful representation, it is about the measurement uncertainty. There may be instances where you cannot measure with reliability. So therefore, this has broadly comes under this, right? So it's about the two recognition. And at the same time, I would like to suggest that you go and read the conceptual framework further. There, you can get more information on that. Okay. So let's come to the final aspect, the most important aspect. It's about the measurement. So when it comes to measurement, you know, it is the process of determining the monetary amount at which the elements of the financial statement are to be recognized and carried in the financial statement. The recognition means it's about recognizing them as asset, liability, income, expense, or equity. The measurement is about assigning a monetary value for that, the value at which you should measure them. For example, when it comes to the PP standard, it says that an item of PPE should be recognized as an asset. That is the recognition. PP standard එකේ කියනවා asset එකක් අපි recognize කරන්න ඕනේ. Sorry, PP item එකක් අපි recognize කරන්න ඕනේ asset එකක් විදියට. ඒක තමයි recognition එක. එතකොට measurement එක, it says that at the recognition you need to measure the PP item at its cost. එහෙනම් ඒක තමයි measurement. Right? So when it comes to the leasing standard, it says that you need to recognize right of use asset. It's as an asset, right? And also the lease liability. It's a liability. So therefore, in a kind of lease transaction, you need to recognize an asset, right of use asset, and corresponding lease liability. It's about the recognition. But when it comes to the amount at which you should recognize, that is what we call the measurement. So according to this new conceptual framework, it says that broadly, there are two measurement bases. One is about the historical cost. The other one is the current cost. Still, the historical cost is so applicable, so prevalent in this environment. If you take especially the PP, still we say that initially we have to measure them at the cost, and intangible asset has to be measured them at the cost. Even if you take certain liabilities, so we are supposed to recognize them at cost. So therefore, the cost consideration, historical cost consideration is still there. But nowadays, we are moving away from this historical cost to a new measurement, and we call it the current cost. And this current cost, in fact, we are talking about three types of current cost. So later we'll be discussing them in detail, especially when it comes to fair value. So under the current cost, one of the most interesting measurement base that we discussed, we call it fair value. So in fact, we have a dedicated lecture for that. In that, I'll be extensively discussing about the fair value. So that is the current cost. Fair value in the sense, simply putting, it is a market price. So it is the price at which, if you sell a particular asset, what is the price that you would get today in the market? If you sell an asset, what is the price you get? Say that you have a PP item. If you sell them today in the market, what is the price you get? You have a motor vehicle. If you sell them today in the market, what is the price that you get? It is fair value, right? So it's about the current cost. It is not the cost, but it is the fair value. In the cost, you have an entry price. In the cost, you have entry price, but at the current cost, you are more or less talking about the exit price, especially in the fair value, the price that you would get if you sell an asset. Similarly, if you apply that to the liability, the price that you would pay to discharge a liability. So when you are discharging liability, the price that you would have to pay, the price that you would receive to sell an asset, and price that you would have to pay to settle a liability. So it's about the exit price, the fair value. The other basis what we are using is what we call the value in use. So value in use, in fact, you would have referred that it's a kind of entity-specific measurement. You have discussed them under the LKS 36, impairment of assets. When it comes to the impairment of assets, there you discuss about if you continue to use a particular asset, what is the return that you would generate? In the sense, let's say that you have a machine. If you want to get the value in use, what you need to do, you need to forecast the future cash flows that is generated by this particular machine and get them discount, establish the present value, that is the value in use. So it's again a current cost, but it's an entity specific. So it's different from the fair value. The fair value is a market-based measurement, but here, when it comes to the value in use, it's an entity-specific measurement. So it is focusing about a particular entity scenario, and it is the benefit that the entity would take. It's not the market. And similarly, there is another cost, we call it current cost. That is the current replacement cost, what we are talking about. So if you have a particular machine, if you are to replace the capacity of this machine by a similar machine today, how much would you have to pay? අපි ගාව යම්කිසි මැෂින් එකක් තියෙනවා අවුරුදු කීපයක් භාවිතා කරපු එකක්. අපි මේ මැෂින් එක අද රිප්ලේස් කරනවා නම් ඒ කැපැසිටි එකම තියෙන තවත් මැෂින් එකකින්, right, what is the price that you would have to pay? That is the current replacement cost. That is to replace the service capacity. Service capacity, same service capacity එක තියෙන asset එකකින් replace කරන්න given a price. That is called the current replacement cost. So we would discuss even on that. Again, it's an entity specific measure. Ekat entity specific. So therefore, it is different from the fair value. Fair value is a market-based measure. The current replacement cost and the value in use, it's an entity specific measure. So those are something that we'll be extensively discussing later, but just to draw your attention. It's about the measurement. Just then, that is the key content what I wanted to discuss with you. When it comes to the benefits, you can simply read and understand. If you have a kind of a conceptual framework, the development of accounting standards be consistent and logical, we have repeatedly discussed. Then the increased international compatibility of the accounting standards, based on the International Accounting Standards Board, ISB, the IFRSs are developed. Currently, more than 190 countries are adopting IFRSs. So දැන්ට රටවල් 190 IFRS adopt. So therefore, see the international compatibility. So the one set of standards for the whole world. So that is IFRS. So that is because of the ISP. So it increased the international compatibility. The standard setters should be more accountable for their decision, because standard setters need to make sure that whatever this account standard that they would say that must be in line with the conceptual framework, right? So therefore, you cannot violate the fundamentals. You become more accountable. Communication between standard setters and their constituents should be enhanced. So think about the FSB and ISP communication, the standard setters, so they can do a kind of a more meaningful communication because they are on the same basis. Then the development of accounting standards should be more economical. So the underlying theory is there. That is conceptual framework. You don't have to reinvent the wheel. So it is already there. So all what you have to do is uh, develop the accounting standards simply based on that. Where conceptual framework covers a particular issue, there might be a reduced need for additional standard. So the burden on the accounting standard would be less because the major part is accomplished by the conceptual framework. And also, when it comes to the conceptual framework, we highlighted that when it comes to the objective, it focuses on the decision usefulness. It talks about the decision usefulness over the management stewardship. So yes, we do acknowledge the management stewardship, but we are focusing more on providing useful financial information. So therefore, our focus is on decision usefulness. That is also a kind of benefit. So at the same time, there can be certain limitation. When it comes to this conceptual framework, the small organization can be feel overburdened by the reporting requirement. So based on the applying the accounting standards, the full set of accounting standard is not going to be an easy task for a small organization. But but at the present environment, we have the option that small and medium enterprises, we have a separate set of standard. So therefore, this issue is to a greater extent addressed. And also we discussed that we are focusing on the economic performance. It's not the social performance or the environmental performance. So in that sense, that is also a limitation. In the nowadays, we are focusing more on the economic performance, the environmental performance as well as the social performance, which is taken care of by the sustainability reporting and integrated reporting. And also, this is something we have discussed even that was witnessed in 1960s. So though it is claimed that the conceptual framework is a normative theory, if you really dig deeper and if you're looking at it from a critical perspective, it is nothing but simply the codification of the existing practice. So that is nothing but the codification of the existing practices there. So therefore, it can be criticized on that. It simply look at what is going on in the practice and then they simply codify that. So it is another limitation. Right. Then I have taken much of your time. I'm really sorry for that. But I still believe that it is worth taking you through the whole content. I think we have managed to uh, go through. Yeah. Please re-explain income according to the revised conceptual framework. Sure. So when it comes to income, it's a pretty straightforward thing. Yeah. When it comes to income, it is said that income is increase in asset or decrease in liabilities that result in increase in equity. So let us take a simple example and see how it works. Say for an example, you make cash sale. If you make a cash sale in your organization, what happens? It increases your cash. Cash is asset. Asset increases. So at the same time, it increases the equity. Equity increases. So therefore, it is income. At the same time, it says that even income can be a decrease in liabilities and increase in equity. If I take an example for that, think about settling a kind of liability, trade payable, and you are receiving a discount. If you receive a discount, liability decreases, at the same time, equity increases. That is also another example if I'm to highlight these two. But at the same time, if I say that, think about owner bringing some money into the business. What happens? If you invest money in the business, definitely your cash increases. So the asset increase is there. And also at the same time, you can see the equity increase is also there, isn't it? If the owner invests money to the business, equity increases. But that is not income. So therefore, in the definition of income, you should also pay attention to this point as well. So in order to avoid that, they are saying that other than those relating to the contribution from holders of equity claim. ඒතකොට ඒ නිසායි මෙන්න මේ කියන කොන්දේසියත් ඇතුළත් කරලා තියෙනවා. එතකොට සාමාන්‍යයෙන් අපි කියනවා ඉන්කම් එක ඇසෙට් එක වැඩිවීමක් ඉක්විටි වල වැඩිවීමකට වෙනවා නම් ඒකේ ඉන්කම්. ඒ වගේම ලයබිලිටි එක අඩුවීමක් වෙලා ඉක්විටි වල වැඩිවීමක් වෙනවා නම් ඒකත් ඉන්කම්. හැබැයි සමහර අවස්ථා තියෙනවා අපිට පේනවා ඇසෙට් එක වැඩිවීමක් වෙනවා ඉක්විටි එක වැඩිවීමක් වෙනවා ඒවා ඉන්කම් නෙමෙයි. උදාහරණයක් තමයි owner invest money in the business. එතකොට ඒ හින්දා තමයි අපි මේ definition එකේ මේක exclude කරන්නේ. It is except the contribution from the holders of equity. In that sense, we will witness that the increase in asset is there, increase in equity, but that is not income. So that's what I told at that point. Does that make sense? I was taking 3 examples, right? The expense, you can do the same. Hope that helps. Only 2 chapters, yeah, 2010, yeah, yeah. Right, okay, now I think it helps, okay. Then thank you very much. So see you in the next class. Probably I'll be taking with you the fair value accounting, then we'll be discussing on the measurement in much more detail. Right, then thank you very much. See you in the next class.